Hi, good morning, everyone. Welcome to our Friday weekly Ask Me Any Stock sessions. If you guys can see and hear me, this type of GM for good morning. Let me know if this is working right now. We're live on YouTube as well as on Facebook. Let me know, guys. Type of GM for good morning. If you can see and hear me, thank you so much. I think Yak3, good morning. Let me just go to put your comments out on the screen, or just to acknowledge you guys. Good morning. Hi, Ray. Good morning as well. Good morning as well. Glenn, awesome. Good to see you here. All right, a lot of familiar names, familiar faces. Simon, good morning. Tiger, Emily, thank you so much. Video Junkie, Chance, ABC. Morning. All right, welcome to the Ask Me Any Stock session. All right, and today we'll be talking about the US market, the US market. So if you're looking at the US stocks, right, the US market, the S&P, right, any US stocks, whether you want to buy, you don't know what to do, whether to sell, to get out, to cut loss, to get in again, you are in the right place. All right, so before we begin, guys, would it be okay if you help me to like and share? Click on the like and share button. Of course, if you have not yet subscribed to our YouTube channel, just go to do that. I think there will be a button or a bell icon right at the top. Click on it, subscribe, so that when we go live in the future, you will be alerted as well. All right, you'll not miss out on some of my top YouTube videos that we upload every single week on some of the top stocks, and also sharing a little bit about the one good trend strategy. All right, so welcome. I think a lot more of you have joined us. Welcome to this US AMAS session. So for those of you who don't know me, my name is Joey, right? Joey Choy, top tier retail trader in Phillips Securities. I've been doing this for more than 15, 20 years now, all right? And my forte is pretty much in stocks, right? We do US stocks, we do Hong Kong stocks a bit. I mean, mostly on Singapore stocks as well, all right? But pretty much stocks, right? Pretty much stocks. And we use what I call the one good trend strategy, right? To know when to get in and also when to get out, right? So later when we analyze your US stocks, right? That's where I'm going to pull out the One Good Trend Pro indicator, right? Which is the framework of the One Good Trend or the One GT strategy, all right? And give you a quick opinion, right, on what to do, right, in a matter of seconds, right? Just by using a tool to guide us, right? So today, just take note, guys, today we don't have time to, break down the whole strategy for you, explain how the whole 7-step checklist work in terms of the strategy, or how the whole entire indicator that we are using works. So if you want to find out a little bit more about the entire strategy, right, what happens is you want to attend a free webinar, right? Attend a free webinar next Tuesday on the 31st of March. I think, yeah, next Tuesday, 31st of March. I think just place the link in the chat, right? So just place the link in the chat. That's where you will be guided to this page right over here. So click on the link in the chat. You'll come to this page right over here. Yes, correct. 31st March 2026, next Tuesday, right? 7:30 p.m. On Zoom. On Zoom, all right? That's where we'll break it all down for you, all right? We'll give you a bit more context, a little bit more, step by step on how to do it. How do we actually filter out the top 1% of stocks, all right, in seconds, right? And then know what to do with it, right? When to buy, when to sell that. Right, so that's kind of like a 7-step checklist for it. Link is right in the chat. Click on it. You come to this page, enter your name, email, phone number. We'll send you a reminder and the Zoom link to attend next Tuesday webinar session. All right, cool. So that is the link in the chat. Click on it, and I'll see you more. And I can't wait to share with you guys more on Tuesday evening. Okay, Ken? So let's get started, right? We'll do a quick market outlook, right? Look at the US market, of course, the S&P 500 index, the Dow Jones, right? The Dow Jones. And then we'll go on to the next part whereby we will go ahead to analyze the stocks, the US stocks that you guys are asking about. So I think some of you are already typing in the name of the US stocks that you want a quick opinion on, right? So very good. But later when you type in, right, take note that you want to give us a bit of context, all right? Don't just put like one Meta, right? Like, what do you know about Meta, right? Are you looking to buy? You're looking to sell? You bought last year, last month, what price? Give us a bit of context so that when we go into another stock, all right, that's where I think you can get more value as well. It'll be a bit more personalized to you as well, right? Based on the context that you have given us. Does it make sense, Bob? All right, Ken. So give us a bit of context, and that's where we'll prioritize as well, and choose those, those messages whereby, and they put in the time to type the context and then not just the stock name. Cool. All right. So that's what we'll do. And at the end of it as well, at the end of this session, guys, we'll go ahead to cover three bonus US stocks that you can put in your watch list for potentially even more upside. All right. So I know the market has been weak. I'm little look at the market, right? It's been coming down. S&P has been pushing to a new multi-month low. All right. But are there actually stocks that could be opportunities to think about getting in, or maybe even everybody's going down, but they're not going down, they're going up, all right? Are there stocks like this, whereby, they're actually performing better in times like this, right? Based on what is happening in the market right now, right? That's where, at the end, we'll share with you guys three US stocks at the end, right? So let's get started, right? AMAS US market, let's get started. So let me just go to introduce my team member, all right? So I've been out for like past 1-2 weeks. I was traveling a little bit, during the March school holidays with my family. So I'm back, right? So, but every Friday you can see that we go live, 2 of us, 3 of us sometimes, right? That's where my team is here with me. Today, Z is not joining us, all right? And Z is working on some other projects, but we have Bervin, right? Bervin, one of the top brokers under me in Phillips Security as well, who is, assisting us with our group coaching sessions with our graduates, our one-on-one calls with our mentees, even assisting our team's portfolio manager with our portfolio management business as well, right? So Bervin is a CFA chartered financial analyst holder, right? Basically an expert in anything to do with charting fundamentals, right? One of the highest qualification one can ever get in the banking and even the finance space, right? So let me pass on the mic maybe to Bervin, right? Just to share a bit on himself and maybe, how he can add value to you guys in today's session, right? Bervin, go ahead.
All right, thanks Joey for the introduction. And also welcome back. Hopefully you had a good holiday. Okay, so a little bit about myself. Like Joey said, I am a chartered financial analyst charter holder. But what does it mean is I just compare I do a lot of comparison between the macro environment and individual stocks as well. I see how each stock benefits or don't benefit from the current environment. So as you guys know, I think the market has been a little bit weaker since the start of March, right? A little bit more volatility coming in, some stocks coming down, some showing some signs of strength as well. So how do we know which stocks are actually performing, or how do we know which stocks are actually benefiting from this entire environment? I think the entire 1GT framework, all right, or the entire 1GT screener have started to show its strength or show its advantages during times like this, right? You don't know what stock to buy, or you don't know what stock to sell. You don't know what is the signals, what are the downfalls of each stock, what is the drawdown. I think that is where you must now I'll change it to a must, not you can attend. You must attend Joey's 1GT webinar happening next week. All right, next week, 31st of March. The last one for this quarter already. Last one for this quarter, March. 7:30 p.m. It's completely free. It's completely free. You don't have to pay a single cent, like what Joey has said. Just key in your details in the link in the chat right there. Right, and then grab a pen and paper. I believe you'll get a lot of value. You'll receive a lot of value from Joey next week. All right, so without further ado, I think I'll pass the time back to Joey to actually introduce our next team member. Joey?
All right, thank you so much, Bervin. All right, yeah, so indeed, guys, the link is right in the chat again. All right, attend our free webinar, especially in current market times where there's volatility, there's fear, there's panic, there's chaos. I can tell you guys that's where opportunities actually appear, right? But if you know where to look for it, right? Because it appears, but you never don't know where to look for it, also no point. Also, attend the free webinar. That's why we share a bit more about the strategy, how do we filter out the top stocks, what to do with these top stocks. All right, Ken? Now, let me go to introduce another of my team member, all right? And that would be Jia, all right? Jia, one of the top brokers under me in Phillips Securities, joining me for more than 3 years now, all right? Special interest in candlestick, very familiar with all the price action, right? And Jia is also helping us with our portfolio management business, our teams, group coaching sessions as well. Now, let me pass on the mic to Jia, maybe just to share a little bit about himself. Right, Jia, go ahead.
All right. So hi everyone. So welcome to today's AMS. So for those who don't know me, I'm Choy, and I have been assisting Joey with operation, client servicing, and also trade execution since 2023. So close to 3 years, and also supporting the team and clients along the way. So for me, basically what Joey has mentioned, I like to look at the chart, look at the candlesticks, and also I've been assisting with the portfolio account also. So looking at the US market this week, we have actually seen a mixture of like uncertainty and also I would say opportunity. So like ongoing global tensions and also including developments in the Middle East, we have actually see like how it actually influence the sentiment, and also at the same time, investors are also closely watching the inflation data as well, interest rate expectations as well. So as a result, price action could be like more volatile, and some sectors actually doing better than the others. So maybe this is why AMS is also an important session for you guys, to join and also to stay grounded and focused, and actually how we can be consistent in how we approach the market as well. So with that, pass on my time back to Joey.
All right. Okay. Thank you so much, Jai. All right. So now, okay, let's go ahead and get started. All right. And now that you know who we are, all right, and what we're talking about, which is pretty much US stocks today, let's dive into a very quick disclaimer. As I say in every session, this whole entire live session is just for education purposes only. All right. It's not really to ask you to buy or sell any stock, all right, or tell you to do anything. Right? Please do a bit of homework. Right, do a little bit of due diligence as well. Right. I'm just sharing with you guys, or maybe not me, but me and my team. Sharing with you a little bit on my strategy, the one good trend strategy, and giving you guys a little bit of an opinion based on the framework that we're using, based on the tools that we're using daily. All right, but you decide on your own actions. All right, whether to buy or sell or don't do anything, up to you. Okay, again, so just a quick disclaimer that we have to show. Okay, so now let's get started. All right, maybe I want to go cover the markets that pretty much a lot of people have been asking me about. Right, is it going to be even more weak? Now let's go to dive into what we call the S&P 500 index. Let me know how many of you want me to cover the markets. Type a M in the chat. Let me know, type a M in the chat if you want me to cover the markets very quickly as to what has happened in the US market. All right, are we potentially seeing even more weakness? All right, could it be even a heavier sell down like compared to last year when Trump introduced the tariffs in April? Right, type M for market. Let me know. All right, M as well. Glenn, thank you so much. Edward, Abdul, Chan, Melina, M. Okay, let's go ahead and get started right now in terms of the market. So you can see that, okay, maybe let's talk a little bit about the news. I mean, I think those of this has been happening for the past 3 weeks. All of you who have been following the news will know about the, US-Iran conflict, the Middle East conflict that is still escalating, that's going up and down. A lot of insane volatility in the markets, right? And it all started when, US and Israel launched missiles at the beginning of March, about 3 weeks, almost 4 weeks back into Iran, all right? And kind of like killed their supreme leader, right, Khamenei, right? And that's where it started, right? Iran retaliated, right? Missiles were launched back, and it escalated a little bit, whereby, now countries are being targeted in terms of their energy infrastructure, and even the Straits of Hormuz, whereby, any ships that go through there, Iran's are firing missiles. So Straits of Hormuz is where 20% of the world's oil actually flows through. So that's where it has led to oil prices increasing, very volatile, going up. All right, and even energy prices have gone up, electricity prices have gone up, even in Singapore, petrol prices are going up as well. So this has led to what we call inflationary pressures, all right, whereby the cost of living is increasing, all right, and there are some people talking about what we call stagflation, right? Stagflation, whereby, it's high inflation, but because of economic activity, people holding off their purchases and stuff, economic activity could go down as well. So that's where the market is a little bit weaker because of that, right? Because of that. And now, there were talks about rate cuts, right? I mean, since last year, in fact, this year, before this whole entire US-Iran crisis and war, right? There were actually 2 rate cuts that were being planned, maybe in June, maybe at the end of the year, right? But now, the Federal Reserve had mentioned that maybe they want to, so when the war started, the Federal Reserve mentioned they want to delay the rate cuts, right? Delay because, it's inflation, right? You go and cut some more, you got even more inflation, right? So they want to delay. But however, over the past few days, there are now talks about maybe a potential rate hikes, right? Don't talk about cut, now go to hike already because of inflation, right? And so that's kind of like a bit of an uncertainty in the market, all right? And if you guys have been following the news over the past weekend, Trump actually threatened to obliterate Iran's energy infrastructure if they do not open the Straits of Hormuz within like 48 hours, all right? But after one day, he gave them 5 more days. All right, he mentioned that there's productive talks, and negotiations are ongoing, but Iran came back and said nobody talking to him, right? So, and then the market starts to, go down again, right? Up, down again, right? But now, right, what happens is that, so give them 5 days. I think yesterday night, he gave them another 10 days, right? Another 10 days until 6th of April, right, whereby negotiations are really ongoing. So it's not really like they're talking to each other, but they're going through like a intermediate, mediator. Like, Pakistan is the one mediating, right? You pass me the peace plan and I pass to them, and then passing each other the peace plan and the 15 points, conditions, right, to end the crisis, right? So it's still ongoing. So it's very volatile. It's very volatile. And that's what we're seeing in the markets, all right, whereby oil prices are still high and inflationary concerns is coming back again, right? So now that you have context about what has happened in the market, now let's go ahead to dive into the S&P 500 index. So you can see that the S&P 500 index, well, if you look at it, I mean, over the past, so I've turned on, so this is the S&P 500 index, the market, not a stock. This one is the market. You can see that I've really turned on the 1GT Pro indicator in terms of the bullish and bearish signal. So if I turn it off, pump, then like that, right? Then no signals, just like that, right? That's what most people are seeing. In fact, most people are looking at what we call just a price. You need a price, no price, nothing to see, right? So there's the price, right? That's it, right? So most people are looking at the chart like this. Nothing wrong. I mean, I could do it as well. It's just a bit more manual, but most people are looking at the chart like this. But with the One Good Trend Pro indicator, all right, that's where, we could turn on a few moving averages just to gauge the trend in the longer term and even in the short term. So if you ask me right now, I would say that the longer term trend in terms of the red and the blue line, for a longer term trend, is still okay. It's still generally up, right? I mean, over what has happened over the past 3 weeks, the long-term trend is still okay, right? It's not really like down, right? It's still okay. It's still generally up. However, the short-term trend, you can see that we look at what we call the green 20 days moving average line. It was like up, then flat, January, February, a bit boring and flat, okay? And when the war started in March, you can see the green line started to point down, right? So if you ask me right now, well, the long-term trend is okay, but quite clearly the short-term trend is down. It has been down not since yesterday or last week, or since last week, already down. Already, the green line has already turned down. And we've been talking about this in our previous AMAS session as well, whereby the short-term trend has turned down. There's some selling weakness in the short term, right? So let's take a look at, in terms of the bullish and bearish signals. Let's go to turn on the very first box and say this will give us an added confirmation if there could be more selling, right? Are we getting bullish signal or maybe bearish signal? Let's turn it on, pump. And now you can see, right? So let's just zoom back to maybe what has happened in like April, February, maybe last year. So you can see, right? Previously, February 2025, last year, in fact, about a year back, you can see we got two bearish signal, right? The green 20 days moving average line also started to turn down, right? You can see we started going all the way down, right? It's a drawdown by more than, I would say, 18%, right? And that was during the Trump, when he introduced what we call the reciprocal tariffs, right? And then the market started to sell down. You can see we got two bearish signal, and we really started to go all the way down until we saw a bullish signal in April, 29 April. There we go, all the way up. Does it make sense? All right, so let's take a look at what is happening right now, right? So you can see that currently, we also got, previously last year got two, now also got two, correct? We also got two bearish signal. The green line, also pointing down, all right? Let me know, guys, if you can see that it's a little bit similar. Type S for similar, guys. You can see that it's a bit similar, right? In terms of the two bearish signal last year, then plus the green line also coming down. So I also got two, 2 weeks apart, then also 1, 2 weeks apart. Type S for similar, if you can see that it's a bit similar. Let me know. Type S for similar. Let's see, right? As thank you so much for just engaging, typing in chat, right? So that really help us to just make it a bit more exciting, right? Rather than I'm talking to myself like that, right? Thank you. All right, Chan, Glenn, similar, exactly, right? So you can see it's quite similar. Not exactly the same, but you can see that we got two bearish signals. At a point in time in February last year, you can see the red and blue line, the long-term trend was actually up, right? Something like now, it's about the same. I see the red and blue, red above the blue, both pointing up. Same now, red above the blue, both pointing up. Pump, two bearish signal, all the way down. Same thing. Now we got pump, two bearish signal. All right. I don't know whether you were from here you take and then you can go all the way down. I'm not saying it will happen, right? But don't you agree that there's still some weakness in the market in the short term? We're not exactly out of the woods yet. all right, there is still a lot of volatility. There's still a lot of uncertainty in the market. There is definitely still some short-term weakness in the market, right? Which is correct, as I say, right? Because this whole negotiation is still ongoing. Trump kind of like extend the deadline, all right, to give Iran's time to negotiate, right? By another 10 more days, by 6 April, you don't respond, maybe you extend. So you see that Trump's strategy is like just say first, right? Just threaten first. Then even last year, tariff also, right? I think with China and other countries threaten first. Then after extend, and talk, and after that, then settle, right? So that's how he is, how he was just say first and then threaten, and after then coming to a deadline, then you extend again, right? And that's what we are saying, right? So because of this, there's uncertainty, all right? Things can go either way. Because if I hope that won't happen, but if ever it escalates more, all right, if ever Iran's, because Iran is threatening, right? If you were to boom, all right, my energy infrastructure, or my oil fields, my oil facilities in Iran will say that, okay, that's where I will launch missiles into the Middle East. So now it's getting a little bit more complicated because other Middle East countries in the Gulf region, right, Kuwait, UAE, Saudi Arabia, Dubai, right, are being put in, right? Probably they cannot launch missiles into the US, a bit far, right? But that's where they will launch missiles into, I think Qatar got hit as well in terms of their LNG facilities, right? That's where they will, launch missiles into the Middle East oil refineries, oil facilities, infrastructure, right? And that could really push up oil prices much, much more, right? Hopefully it doesn't happen, all right? But if that happens, it can really escalate, all right? It can really escalate, and I think that's where I think the market is pricing in that fear, all right? That little possibility that it could actually happen. And that's where selling is still ongoing. All right, so let's take a look. So now that you can see that it's quite similar, all right, in terms of the two bearish signals, we got what we call so this is the S&P 500 index. The team just placed out the banner, all right, and you can see that two bearish signals, right? Now let's go to draw this bullish, this support that came out right over here, right? So I'm gonna show you guys this is a very key level. Okay, so let me just remove this. Here, right? So 6,500. Right? It used to be 6,700. Look at this, right? So it was like consolidating from 6,700. So the S&P 500 in January, February, it was pretty okay. It was just consolidating sideways, right? It was from 6,007 all the way to 7,000, right? That was kind of like the range, right? Then got got three bullish signals, but we need to break the 7,000 mark, right? I mentioned that if we break the 7,000, that's where we could really start to see, the next phase of upside, right? But unfortunately, it didn't happen. We didn't break 7,000, right? The war started, all right, and then bearish signals started to appear, and we went below the 6,700. But now I would say we are back to this very critical key level. The 6,500. Look at it. 6,005 is where we were in August. We were trading below it. We broke it. Went up, came back down, rebounded. All right. About 2-3 times we neared it, we rebounded from it. And it's a psychological level as well. So right now, you can see we are right here. Over the past 2 days, we are right at 6,000. In fact, now it's like, last night it closed 6,477, which is like a little bit below 6,500 also a bit not so good, right? It means that this support, it's only one night so I haven't really counted yet, but let's say tonight or maybe next Monday, Tuesday, if we really continue to close below the 6,500 for the S&P 500 index, unfortunately, that's where we could still see more selling in the short term happening, right? We got two bearish signals already, right? So that's where I would say as of now, there are more signs of it pointing down than up, right? More signs of it pointing down than up. So let's say we stay below 6,005. What could be the next support level for the market, right? Well, let's go to draw this next line, all right? Right over here, quite clearly, that will be none other than the 6,200 level, right over here. So pretty much back to July, August, market support levels right over here. You can see we're holding quite well, and the uptrend actually continues. So same thing, right? That could be the next support level if we stay below 6,500. I'm not saying that you actually go there, but if it escalates a little more, and you see every time over the weekend, Trump would choose some pattern, right? Say something, and then they escalate, right? So I don't know. Okay, I don't know, right? If so we never know, right? We all never know, right? But if that happens, if it escalates, unfortunately, that's where 6,005 downside could be all the way maybe to the next 6,200 support level, right? So that is the market, right? We're still not out of the woods. Short-term trend down, bearish signals are out, similar to what has happened in April, February, March last year. There we go, right? So probably not, I mean, of course, there's some sectors still doing well. In fact, later, that's where we'll share some top stocks at the end, right? So stocks are still doing well. Certain stocks are still doing well. But of course, most of it who are impacted by, I mean, the overall market sentiment weakening, they are selling down, right? So we don't have to rush to get in. I mean, as I say, there's no rush. Normally, we only want to get in when, in terms of really loading up on positions, all right? When there are clear signs of strength, there are clear signs of the short-term trend, all right? At least not pointing down, right? But now, if you look at it, the green line obviously is pointing down. As I said previously, in March as well, it was going down. But look at this, somewhere in May, the green line started to turn up, right? Then we got the bullish signal. Then different story. Then when you say that you want to start loading up, catch the reversal, go ahead, right? Because you wait until Christmas, but then go all the way up, right? So that is where you want to think about getting in. But right now, haven't yet, right? I don't know when you'll come, right? This bullish signal, let's say you can take, right? This bullish signal, you take, you can, I don't know, you can paste over here or paste over here, but let's say, go on there, we see the green line turning up, we get a bullish signal, that will be confirmation of a potential reversal happening. And that's why we can start to load up on some of those stocks that have been heavily beaten down, all right? Especially if we get bullish signals on those stocks as well. Does it make sense so far? All right. So this is the S&P 500 index, the market, right? A little bit of weakness in the short term, still ongoing. We'll see how it plays out over the next 1 to 2 weeks. I think that's very critical, especially by 6 April, all right? Whether Trump might extend the deadline again to give Iran more time to reach a deal, Now, let's go to take maybe very quickly a quick look at what we call the Dow Jones, one of the index that I get asked quite often on as well, all right? And let's see what it says, right? So same thing, I've turned on my 1GT Pro indicator right over here. Every time we get a bearish signal, same thing, that was like in February last year, we got a bearish signal, the green line turned now, all the way down. When we get a bullish signal, look at this, right? Pam, right? 1 week went down. Another bullish signal, another bullish signal, all the way up, right? But over the past 2-3 weeks, same thing, all right, with the US-Iran war escalating. I mean, you can see for yourself, we got a bearish signal, we got a bearish signal. Then the green line also that was going up also start to go down, right? So Dow Jones also got affected, right? We're definitely seeing still weakness. There is no clear signs of it, like wow, rebounding all the way up. Haven't yet. I don't know when. All right, it could be 2 weeks time, 3 weeks time. If they, if some news, they reach a deal, all right, whereby they stop fighting each other, all right, and the Straits of Hormuz is open, right, and all the ships can start to pass through. So right now, I mean, compared to the period last year, I think in the month of March, right, for the first 3 weeks of March last year, there was like 1,900 ships flowing through the Straits of Hormuz on a usual daily basis. 1,900, oil tankers, ships, containers, 1,900. Now, past 3 weeks, only 100. Right? 1,900 become 100. Right? So it's like, and that has affected the whole shipping industry, right? In terms of the oil flows, even not just oil, right? In terms of fertilizers, right? Most people don't know is that 1/3 of the world's fertilizers, right, passes through the Straits of Hormuz as well, right? Going to Asia, and these fertilizers are used for farming, crop production, factories. So it can affect food prices as well, all right? And that's why we're seeing overall inflationary pressures, not just on the energy and oil part, but also the, crops, right? In terms of the foods as well, all right? Raw materials for food as well, all right? So that's what we're saying, right? So now let's take a look, right? So you can see that bearish signal in play. Long-term trend is okay, but short-term green line is pointing down. Now, I want to share with you guys this very, very key level. So we talk about, when things was good, right? We talk about this 50,000, right? So that was like, you can see, right? So in like, January and February, you asked me, it was still okay, we were like just below the 50,000, right? Go up, come back down, go up, come back down. We need to break the 50,000 clearly, right? To see the next phase of upside, because we are just resting sideways, right? Which is fine. However, when this whole war started, same thing, we did not break 50, and in the end, we break below the 48,000 support, right? So 48 to 50, it was like, for 2-3 months, up, down from 48 to 50, but Dow Jones broke the 48,000, a bearish signal actually appeared, right? And we hit it even lower, right? Now it's 45,960, okay? So just put this in your, this is a very critical level, right? Critical level. Like for example, the S&P 500 index, we talk about the 6,500 and then the 6,200, right? For the Dow Jones, is this level, right? The 45,000. All right, let me just draw it for you right over here. All right, I think that's a very, very critical psychological support level, right? You can see previously in 2024, 2025, it was a resistance level. We came down. We neared it. We came down. Of course, we got bearish signal, then it also go down. Bearish signal also go down, right? But every time we go there, we come down. But one fine day in August last year, we never come down. We go up. We break above the 45,000. Of course, we also got a bullish signal, and then it went even higher, right? So you see, this resistance has turned into what I call a new support level, whereby it's a very critical support level, right? That is where, same thing, we have neared it, we rebounded, we neared it, we rebounded. Now we come all the way down here again, maybe a bit rebound, right? So it's like 45,960. So my sense is this, that I think that, we are not out of the woods, right? We can still see weakness in the short term. We're probably heading towards 45,000, right? But I think that is a very, very key support level. Hopefully, things don't escalate, we stabilize above that 45,000, go to 45,100, 200, then up, then down a bit, right? But still hold above 45,000 now. Then the green line is obviously still pointing down right now. Don't keep on pointing down lah. If it starts to stabilize a little bit, like maybe flat a little bit, something like this, flat a little bit. That could mean that this 45,000 has came out as the same decent support, all right? That could lead the potential reversal back up, right? So of course, if you get another bullish signal like what we saw in April last year, even better. That would be where I would say it is clearer in terms of that reversal, signal coming back all the way up again. But right now, haven't yet. This is what we can look for. That's what we can look for, right? In terms of the reversal. All right, Ken. So that is the market. That's the market, right? That's what we're saying. That's what is happening in the market. Hope you guys are a little bit clearer, all right, in terms of some of the key levels for the S&P 500 index and even for the Dow Jones, right? Okay, Ken. So now let's go ahead to the next segment of the AMAS session, which is pretty much the US stocks that you guys want us to cover, right? So do me a favor, all right, maybe do yourself a favor as well. Go ahead to type in the chat the US stocks, right, that you want a quick opinion on, right? Give us a bit of context. I think a lot of you are doing that. Thank you so much for giving us a bit of context. That's why we'll give you more priority, right? Priority, okay, Ken? So just type in the chat, the US stocks, right? Give us a bit of context, like say you want to, what you want to do? You want to buy, you want to sell, you bought last month, what price, right? Or maybe you buy and then go up, and you don't know whether to take some profit, right? Give us a bit of context, so at least when we analyze for you, a bit more, a bit more context, a bit more personalized to your situation, okay, Ken? Okay, so let me just go through. I've not looked through yet. Let me just pick the very first one, the very first stock for today, right? First stock for today, right? And give us some time, guys. I mean, we each of these AMAS sessions, we try to cover like more than 10, maybe 12 stocks, right? So if we really cannot cover all of it, okay, our apologies, we do our best. So as I say, you can attend a free webinar. Tim just place the link in the chat again. So we have a free webinar, as I say. What we're using is the One Good Trend Pro indicator. So if you want to have access to the very same tools that me and my team uses on a daily basis, that's what we pretty much use only, all right? Attend a free webinar. The link is right in the chat. So you can also, don't need to wait for me to analyze. You can also open and see yourself, what you see is what I see, the same, right? So also better, right? Of course, if we analyze for you, I hope you get value as well, right? But if you want to get access to what we are using daily, attend the free webinar. That's why we'll break it all down for you even more. Okay, now let me go to choose the very first stock for today. Let's see, right? Tigers, yeah, have not bought yet, right? So is Meta and MSFT a good time to buy now? Thank you so much for giving us a bit of context. So you haven't buy yet, but you want to buy, right? But don't know whether it's a good time to buy. Right? Because what you buy then go down some more, right? So whether is it a good time? So very good. Thanks for giving us a bit of context. Let's maybe, okay, I'll just choose one now. Microsoft MSFT. Where is it? There we go. All right, so this is Microsoft MSFT. All right, so you can see I already turned on the 1GT Pro indicator, pump on, pump off it, on it. All right, let's turn it on now. All right, so let's turn it on. And who's asking? Simon, right? Good enough. Let me see. Right, I bought Microsoft at let me see what could. I think a few of you are asking about Microsoft as well. I bought Microsoft at 450. Price came down. You bought at 450. So maybe somewhere around here. All right, came down. Now sell, hold, or add more. Okay, so Kunaf, you got ready lah. Then it came down. You did not get out, right? Let me know, guys. Okay, maybe let's help Kunaf and Simon Tiger Xia out. Sorry. Do you think it's good time to buy? Type B for buy. Type W for wait. Let me know, guys. Time to chat. What you guys think about Microsoft? I mean, I already helped you already. I turned on for you already, right? Off it and now blur already. Don't know what to do. Pump on it. Okay. What do you guys think? B for buy. W for wait. Right? In terms of should we buy right now? Let me know. Let's see. Jechin, wait. Ray, wait. Simon, wait as well. All right. CS as well. Short one. Not bad. I say short some more. Wait. All right. Nikki, buy more to hold. Buy some more. All right. So Kunal, you got like Nikki say go and buy some more. Let's find out whether is it true, right? Josephine, wait. So some buy, some wait. Mostly say wait. Okay. Now, let me go ahead to analyze a little bit on what we call Microsoft right now, right? So very quickly, you can see that for Microsoft, well, we had a couple of bearish signals coming out, right over here. So, I mean, it was very good reversal play. Look at it. It was in April last year, right? We got a bullish signal. Of course, in like February, January last year, pump, all the way down. So when we see a red color bearish signal, red one, right? Then not so good lah, right? Why you want to go and buy? Does it make sense? All right, so you get bearish signal, but bearish signal is just one confirmation. So we have a 7-step checklist to know when to get in and when to get out. So a bearish signal is just one of it. But if you got bearish signal plus the short-term trend, the green line also point down, plus some other bearish candlestick price actions, plus the volume, plus some other things that we look at, right? And all these things are also saying point down. Then you go and buy for what? Makes sense, right? Because it can go down some more, right? Why not you wait for the bullish signal to come back up, you wait for the reversal signal to come back up, wait for the short-term trend to turn back up, then you get in, right? And when you do that, that is where you could see that we saw a pretty good reversal, all the way up 32% in 3 months, right? Now, let's take a look at what has happened since November last year. So this is Microsoft, MSFT. You can see since November last year. Well, we got 1, 2, 3, 4. Well, now got another bullish signal came up, but next day another bearish signal, right? So we got 4, 5 bearish red color signals coming out, right? And it just don't look so strong, right? Bearish signal coming out. The green 20 days moving average line. Look at the green line. It was like down and then flat, then down, then flat, then now. Now I think like still down, correct? So don't you block yourself out, means up, down means down. So we got another, in fact, I think we got another bearish signal plus going down. So probably not the time to buy, right? Probably not the time to buy, right? I think for Tiger Xia, you're asking, is it a good time to buy? Probably not now, because maybe not next week, or what? I mean, as I say, when you want to buy, there must be a reason to buy, right? Don't say I want to buy because it's cheap. Okay, I know it's cheap, it's really cheap, okay, but doesn't mean cheap means you can buy, right? Cheap, then tomorrow, next week become cheaper, all right? Like you just say you buy 450, right? Could not think it's cheap, right? Go and buy. Then you see what happened, right? So we don't buy just because it's cheap. A lot of things can be cheaper, right? So we don't buy because it's cheap. We buy because there's a reason to buy, because there's a confirmation of the reversal. Right? Then you buy. Then you buy with conviction. You buy with clarity. Right? But you buy because it's cheap. Everything is so very cheap, you go and buy, right? So we don't do that. Okay. So right now you can see that we got bearish signals. Pump. And this bearish signal, in case you're thinking this came out last week or last month, no, October already come out already. This was before the whole Middle East war or what. So this one already come out October. Of course, now with this war, it escalated, then more sell down, right? But the first bearish signal already came out in October, November already. We go down, right? And then now we go even lower, right? Because of the current crisis, right? So not a good time to buy right now, all right? We want to wait for confirmations. Now, let me go to draw for you some support level. So I think that is a very key support level, maybe somewhere around that 350, 350. So now the price is 365. So now it's like, we still, you can see we are very near to where we were in April last year, right? April last year, that was where we were supported 350, 340, all right? And now we are nearing right there. So I think what happens is that when you want to buy, I think it's good that, we approach a support, like previously, look at this, right? We approached a support, rebounded 1, 2, 3 times, all right? The short-term trend that was going down started to turn up. We get a bullish signal coming out. I think that would be a clearer sign of the reversal. I think that's where you could think about getting in, all right? Because you get the confirmation you need. But now if you buy, what if the 350 were to break down? Can we hit even lower? All right. Would there be another bearish signal coming out? Possibly, right? And that's why you could see even more selling. So we don't want to buy into weakness, all right? We want to buy into strength, all right? When there are clear confirmations of that reversal. As of now, probably not yet. Now, back to your question, Kunal, right? Back to your question, Kunal. I think, Kunal, you're mentioning that you have got in, wait, let me, Kunal, right over here, you got at 450. So when you got in at 450, I think somewhere over here, probably, okay, so there are two parts of this question. So by right, when you get in, you need to have a plan, right? The thing is that we got a couple of bearish signals, the short-term trend was down. So by right, should not have got in, should not have got in, right? You don't want to rush because there isn't a very clear confirmation yet, right? Very clear confirmation. Of course, we got a bearish signal, so need to have a plan to trim, to reduce, to cut, right? The exposure. Because let's say if you got in at 450, but if it breaks like maybe the 450 support, you got out at 430 something, 440 something, all right? If you have a plan to get out, that's where you could save, like in terms of the downside, you could save, you could save like another 20%. All right, 20% downside, right? So the key here is that, you could get in, no problem, but you need to have a plan. What if it doesn't go up? What if it, were to break the support, we get another bearish signal again? Do you want to hold all the way down? All right, so probably not, right? So have a plan to get out, to trim your exposure, to reduce, to cut if needed, especially in current market conditions. So right now, I would say that, it's really gone down, so I don't know. I think have a plan, if the 350 support level to break down, you see another bearish signal, I think it's good to at least reduce some exposure. You don't want to really hold all the way down, or maybe even add more, all right? Because you add more and then it breaks and go down some more, we don't average down. We don't average down, right? Because you're just throwing good money over bad money, right? Just hoping that you will just recover and it will rebound all the way up. But sometimes it doesn't happen, all right? We want to wait for that confirmation to get back in again. Does it make sense, Bob? All right, so that is for Microsoft. The very first stock for today. I hope that helps to cover the markets. Now, let me pass on the mic to Jia, right? To Jia to cover the next US stock for you guys. Jia, go ahead.
All right, thank you, Joey. So the next stock that I'll be covering on is actually this counter on Micron. So actually, previously we talked about Micron quite a few times. I think there was Team Crew was asking about Micron, what's the take? And I think I saw someone also, I think Vincent, interested in buying Broadcom, Micron, Nvidia, Alphabet. So what is the potential entry buy zone? So Micron, and I think there's someone that actually bought Micron, user, also mentioned that bought Micron at 230. So now Nasdaq is going through correction. What should I do? Buy, hold, or sell? So I think this counter I'll be covering on Micron. Let's just dive into this counter. Just let me, okay. Hopefully you guys can see my chart. So I think Micron previously was very strong, showing up a lot of strength previously, back in 2025. She went out from actually previously about that 120 and went up close to that 450. So if we just look at it recently, what we are most concerned is about is like currently how is the stock doing. If we just look at the chart wise, I would say previously it reached a high of about at 450 or even at 480, which was quite the recent high. But if we look at the chart wise, recently there's a 1GT bearish signal that appeared. If we just look at the chart, I would say currently the support is near that 350. Why? Previously in January, you can see that prices actually came close to that 350 for a few days and managed to break above afterwards. And it went to that 450 and came back to test this support quite a few times back in Feb, Even in March, it actually came back to test this level. So as of today, as of actually yesterday night, prices actually came close to that 350 again. So I would say currently the support is near that 350. But there's if you notice, the 1 GT bearish signal actually appear, and also the 20 days moving average actually is already pointing down. So I would say currently, if you look at the chart wise, it's kind of showing a bit of weakness, but it's still above this 350 support. So 350 support might be a key support that you want to monitor. And if prices break below this 350, we can actually see that prices might move back towards that 280, which was previously support level, a resistance level turn support. So, but if you look at the chart wise, the 100 days and the 200 days is still pointing up. So overall, this counter is still showing strength in terms of the long term, but in terms of the week, in the short term wise, it's kind of showing a bit of weakness. So, for user who's actually previously bought at 230, if you previously bought at 230, you actually have an upside of 53%. I would say if prices break below this 350, you might want to actually secure your profit just in case it continues to show more weakness. So if you are looking to you already have a position in this counter and you are in a profit, if prices continue to show more weakness, you might want to actually secure your profit just in case it continues to come down. But for those who are actually looking at Micron, asking whether the stock will rebound or looking to enter, I would say 350 is actually a key support level. I wouldn't know whether it's gonna rebound, but as of now, if you look at the chart wise, it's showing weakness and there's a 1 GT bearish signal. So 350 might be a support that you might want to look at, and if it continues to break below this 350, which it actually was able to stay above this few previously, you might see more weakness towards the 280. So I would say for now, if you're looking to enter, this is a support level that you want to monitor. Maybe you want to see whether with the current weakness, whether it's able to stay above. I would say for now, just wait and monitor first. And if prices are able to stay above that 350 for the next few days, and you see that the 20 days moving average start to flatten, and even afterwards start to show more strength, maybe that's when you actually enter. So like what Joey actually previously mentioned just now, we actually like to buy into strength and not when prices are coming down, you average down. So I would say for those who are looking to enter, best is to wait for these 20 days moving average start to flatten first, and afterwards show more strength. So once all the three moving averages are pointing up, showing strength, that's when you can actually reconsider to enter for this counter. Yep. So hope that answers the questions on Micron. And if not, I'll pass on my time to Bhavin to cover the next stop.
All right, thanks, Jai. Okay, so next stop. Oh, Yatri. Hi, Yatri. Hey, hi, welcome back. All right, so UMAC average bought price at 1674. I see support at 1121. May a form higher low before that itself seems worth waiting. Please share your thoughts, please. Okay, so let me just throw out my screen right here. Okay, Yatri, I'm sorry, I'm not really familiar with UMAC. It's unusual machines. I was just looking at it right here. It looks like it's a drone solution company, but I'm not sure whether they have participation in the defense space as well, because it looks like it's purely based on entertainment, recreation, and competitive racing. Okay, so interesting drone company. Let's look at the trend for a little bit. Okay, so you bought at 1674. Let me just mark it down for you. 1674. Right, 1674. That's right around your entry price, right there. Let me use the total line for now. Okay, let's just see. Okay, so 1674 was your bought price. Yes, you see some support at 1120. 1120 as a support. Right. Yeah, I will agree with you. Yes, maybe about upwards from 11.20 to upwards about $12. I would say that would be a very, very key support zone right now. Not just like a specific level. Why we don't just use 11.20 right at that range is because I may be drawing 11.20, you may be drawing 11.20, but then Jai maybe he will draw 11.50. Then Joey will go on to draw at $12. So I think it's always like a zone. It's always like a zone. We don't just use a specific buy price or a specific level, we try to use a range. So we capture the entire support area. All right, so I think right now, yeah, so may form higher low. So higher low right now, I would say that higher low could be potentially forming. So why is that? So if we just draw a line as well, we can see that potentially there could be a higher low that is forming, right, over the past few months. And so right now, if we focus on the trend, the 100 days, 200 days moving average. I would say the 100 days moving average is more flat, right? It's more towards the flat side, maybe slightly pointing down, definitely not pointing up at this point. 200 days moving average, yes, that is still currently pointing up. 20 days moving average, I think as of this week, have started to show signs of weakness. I have started to show signs of weakness already, actually. So that is maybe something that you want to keep a lookout for. All right, so you have bought at 1674. So now what is the plan? All right, what is the plan? It looks like the counter is quite volatile. The daily price range or the daily price movement have seen has been quite big, right? Been quite big. The one day move up about $2, another 5%, and that next day another 5%, another 5 to 7%. In fact, coming down, we got a 1 GT bearish signal, right? Bearish, not bullish. Previously have 3 1 GT bullish, but now we have a 1 GT bearish signal right around the time, I believe, where you previously have bought as well. So usually when we see bearish signal, we don't really want to rush in. We have to take a step back, reevaluate again to see if there are sellers actually coming in. So I think right now, I would say the key support or key resistance, the key resistance level would be around that $22 level to upwards maybe of $23. 22 to 23, that's the resistance zone. So I think that is where you can see sellers have actually come in to take some profits. All right, you may see this psychological, let me just change this to a bow line. This psychological $20 level was where sellers had previously came in as well. All right, so we have a couple of key levels to actually watch out for. Right, a couple of key levels to watch out for. You got that $20 level, $22 to $23 level, 10% upside from there, and the next support right around that $11 to $12 level. Right, so I think that represents quite a little bit of risk on your part, right? Quite a little bit of risk on your part, right there, downwards of at least 34 to 35% to that support level from that entry price. So for more volatile counters like this, what do we want to use? We want to use something that have actually taken into account its volatility, right? Which is that trailing support. So like what Joey did just now, he turn on, turn off the buy sell signals. We can also turn on, turn off the trailing support and resistance lines. All right, so as long as prices are above the trailing support, like since early of March has been above that trailing support, giving it room to breathe. Then on this day right here on the 20th of March, the trailing support gave way. The sellers took control. That is when we need to be a little bit more careful already, because if we just purely use the horizontal support and resistance lines for very volatile counters, you may be trapped with high losses. You may get stuck, and then that's when people start to think about averaging down, buying even more, hoping prices go up. But next thing they see 20 days moving average already pointing down, 100 days pointing down, 100 days crossing below the 200 days, 200 days started to point down, and then what? It's too late. And it's too late, you may see further weakness actually, in fact, coming down. So I think right now, not too late. Right, not too late. The prices are still rather close. All right, rather close to that trailing support where it had broken in the past few days. We are trading just underneath it. So maybe you want to take a step back, reevaluate that trading position. You don't maybe don't really want to buy anymore. In fact, you want to think of an exit plan. If in fact prices break below that 100 days moving average, we are just at the 100 days moving average. 100 days moving average prices testing it. Hopefully we're able to see a rebound. But if it isn't able to actually hold above a rebound from that 100 days moving average, then you may see your lower high or higher low formation get broken. Right? So that's what you're looking out for, right? You have a plan, you don't want to see that formation broken. And what if that formation is broken? You want to move out of a position first, especially when it's a little bit more volatile. And I happen to see that, yeah, I think maybe the company had released some news that they are going to raise some funds. They entered a placement, but I never read into it. But it looks like it's a share offering. What are you going to do with the share offering? I think that is something you want to look into as well. All right, so Yatri, I hope that helps for UMAC. Very new counter, very interesting counter as well. Maybe something that could see a potential rebound upwards towards $20. Then maybe that's where you want to set up some alerts as well. Close to $20, hey, maybe that's where you want to take some profits alongside those other sellers. Okay, so that is for UMAC. Passing the time back to Joey to cover the next stock for you guys.
All right, thank you so much, Mervin. All right, now let's move on to the next US stock, and that would be none other than this company called ConocoPhillips. All right, ConocoPhillips, right over here, trading at $133. Who's asking about ConocoPhillips? Let me just pull out the comments. I think we have right? CS as well. ConocoPhillips, you buy. Thanks for giving us a bit of context. I'm really putting the effort to type. All right, so it's you can see once I turn on the chart, it blocked my whole screen already, right? But okay, later then I will, after reading, then I'll put it down. Okay, so you buy at $120, has moved up strongly, very good. Definitely, I think now it's like 133. So you confirm. I mean, you're making some money already, congrats. Tested the 130 region. Yeah, in fact, yesterday night we've broken the $130, showing continuation strength. All right, with trending tag above the key moving averages, I put a trailing stop at $129. Right, so very good. Let's take a look at ConocoPhillips. Like in terms of your entry, you got in. What should you do to protect your current positions? Maybe even to think about adding more positions. Right. Let's take a look at what it looks like on the One Good Trend Pro indicator. So this is ConocoPhillips. Right, the code is COP. So those of you who don't know, hey, why this company is like everybody going down, you're going up. What this company is in the oil and gas space, right? The exploration and production of oil, all right? And, if you've been following the news, as I mentioned just now, we're seeing oil prices going up, all right? And that's where we are seeing strength in the energy sector, the oil and gas sector. And stocks like this are, in fact, much stronger, right? Much stronger. I mean, they were, in fact, really strong since okay, let me show you, right? So I think somewhere around January, right? So you can see for the ConocoPhillips January, we were actually capped below the $100. Look at that. Every time we go to 100, we come back down, right? Come back down. For the most of last year, we were actually below $100. But when we broke the $100 in January, right? January, that was like two months before the whole recent Middle East crisis, January, we broke the $100. You can see that we have started to move up already. Of course, now go up even more, but in January already started to move up. All right. Now let's go to turn on the bullish and bearish signals based on the 1GT Pro indicator to see what it says. Right? I mean, are there bearish signals, or bullish signals as another confirmation? And there we go, right? So you can see that, we got bearish last year. But as I mentioned, then you can see previously in January, we got two new 1GT bullish signal. And that was where that really sparked the whole, all the way up the red. I mean, in fact, actually in December, we already have, but this one go up a bit only, right? Go up, then we're still kept below 100, right? So 1, 2, then 3, 4, pump, then even higher. So we're looking at a pretty good, I would say, uptrend, right, in terms of bullish signals coming out since December. In January, in fact, in January, February, we broke the $100 psychological resistance. Bullish signals got triggered, and we went up even more, right? So you can see the green line is like still up. Long-term trend, red above the blue, still up as well. So definitely a stock to want to think about, putting in your watch list for potentially riding even more upside. So now let's take a look at, so you got in at 120, right? Very good. Let me just pull up, right? So you buy at $120. $20, right? So very good. Now it's 133, right? So what could be a good kind of like plan to think about protecting your profits? And when I say that, all right, let me go to turn on the 1GT Pro indicator in terms of the very powerful feature, right? It's called the trailing support and resistance. Let me turn it on. Pump. There we go. And you can see, since December, when we got the first 1GT bullish signal, when it was like around $90 like that, from here all the way to now, 46%, right, in about 3-4 months, right? 40, pretty good, right? And counting, I don't know, maybe you can go up some more, okay? But when we got the first bullish signal that led to a 46% gain, we already got a trailing support popping out. And this trailing support, you can see, is below ConocoPhillips, right? It below the price. As the price move up, it follows it to move up, right? From coming out at 85, follow 85, now follow until become 121. Does it make sense? All right. So it gives the stock the space to breathe. It accounts for the volatility of a stock, right? While allowing it to hopefully move even higher, right? While giving it the breathing allowance, right? To hopefully maximize your profits even more, right? And that's what the trailing support line does, right? So you can see that what you could do right now is that you want to have a plan to make sure that, you know, if the price were to push up even more, okay, you could have a stop loss, right, below the trailing support line. So for example, let's say, of course, if you've gone in earlier, you know, at $90, $80, $100, that would be great, right? But of course, you got in, you know, a little bit higher. But that is where you can see you can put a stop loss below the trailing support, below it, right? So as the trailing support moves higher, you put it below. So now, right now, you can put the trailing support. I think trailing support is about 122. You could put it below, right? Just put 118, 19, right? Just give it a bit more space. If you go below the trailing support, not so good. We give it the space to be above, right? It should be above if it's good, right? But if you give the space, then you still go below, and then something wrong, right? Like some of the stocks where we got bearish signals, that's because we went below the trailing support level. You can see after the bearish signal, what happened? Right, you can see yourself start going down, right? So when we go below the trailing support, when we get a bearish signal, and then don't hold all the way down, take some profit, get out, right? Have a plan to reduce or trim your exposure, right? So that could be what you can do right now, right, in terms of protecting the profits, right? In terms of a potential entry for those of you who are looking to maybe enter this stock, right? Maybe you've not got in previously here or here, right? You've gone up, but could it still be a good entry? Well, it could be as well, because as I said, these are the sectors that are in play, all right? We want to buy into strength. So these are stocks whereby, even though it's a bit more expensive, right, than last month or last week or last month, but we buy into strength, right? That is the whole core belief of the one good trend strategy. As I said, I don't have time to explain the whole mindset and break it all down for you. Attend the free webinar next Tuesday, but that's one of the core beliefs whereby, the link's right in the chat, click on it, right? But essentially, we're going to buy into strength, right? We're going to buy into stocks that have already proven themselves in an uptrend, even though it's slightly more expensive, even though it might feel a bit more uncomfortable. All right, so team, place the link in the chat. All right, and that's what we want to do. All right, so you can see if you think about entry, nothing wrong. But the main thing is that don't buy and no plan and don't know what to do. No, right? You buy with a plan, right? You buy with clarity, you buy with conviction, you buy with a system, a tool to guide you. All right, so a potential entry could be near what we call the trailing support level. So you can see right over here, right? There's space between the trailing support and the price. Correct? Why got space? Because we give it the space, right? We, as I say, this trailing spot, we follow, but don't follow too closely. You give the stock the space, right? To breathe. Don't be like a stalker that very close. No, give it some space, chill, relax, Hopefully you can go up some more, then you follow some more, right? But give it the space to breathe, right? As long as you're above it, relax, chill, continue. Continue riding. Okay, Ken? So a good entry could be near the trailing support, if possible, if it does dip to near it. If it does dip to near it, right? So you can see, but sometimes doesn't mean you want it to dip, means it will dip. Sometimes it doesn't want to come down, it's strong, right? Why, you want to buy, people also want to buy, right? That's where you can go up, right? So preferably you can dip near the trailing support. But if it does not dip, then you might have to buy a little bit higher, which is above what we call the horizontal support level, right? And that would be, I would say maybe, right? It's only like about 1 week plus, but I think that, we could have seen a little bit of a horizontal support coming in slightly higher, right? Slightly higher. And that would be maybe somewhere around the 126 region, right? 126, maybe even to 128, right? So it's only like a few days, but it seems like over the past few days, we're hovering around 126 to even that 128. So if it does dip a little bit, you can see a couple of bullish green candles, right? A little bit volatile, but buyers are always coming back on dips to push it back up, right? To push it above the opening price. That's why we're seeing green bars, right? Green bullish bars. So anything I think above 125, 126, 128, I think that's where potentially that's where some bargain hunting can come at, right? So if it does dip a little bit, it'll keep a good entry to write even more upside, maybe all the way to 140, 150. That could be the upside targets. Cool. All right. So that is for ConocoPhillips. Not too bad. One of the stocks that is in our watch as well. Long-term trend up, short-term trend up, bullish signals since December, still in play. All right. Above the trailing support is another confirmation. Even in fact, above the higher horizontal support as another confirmation as well. So not too bad. Definitely one of the stocks you want to put in your watch list for potentially more upside, especially in times like this, in the current Middle East conflict, whereby these sectors are doing relatively well. All right. Now, let me pass on the mic to Jia to cover the next US stock. Jia?
All right, thank you, Joey. Thank you for covering ConocoPhillips. The next stock that I'll be covering on will be actually on this counter. Just give me a sec. Nova Nodis. So I think Cypher say, hi, new member here. I bought NVO at US 40. Can I DCA now at 36 to 37? So no, welcome. Glad to see you here over AMS. So maybe those who actually join us regularly, maybe you guys can help Cypher here also. No, maybe you guys can say whether he should DCA now at 36 to 37. Maybe you guys can type Y for yes, no, he should DCA for NVO, or maybe N no, type a N for no, he shouldn't DCA for NVO. So maybe we can help Cypher here to see whether he should actually DCA for this Novo Nordisk. So I believe those who actually join Joey often should understand how our framework works, how our framework is, and also looking at this counter, based on the chart, whether we should actually DCA downwards or what. Glenn say no. Yatri say wait. No for DCA. Brandon say wait. No, yeah. So actually, I agree with all of you. No, you guys should actually be waiting. Should be actually shouldn't DCA down. So hopefully, Cypher, you're still here. So the main reason why we actually wouldn't DCA down for this counter, if we just look at the chart wise, you can see that basically, with the 1GT framework, you can actually see that there's a 1GT bearish signal, which actually indicates that for Novo Nordisk, it's actually showing some weakness. Not only that, if we look at the trend wise, you can notice that if you just zoom out for this Novo Nordisk, you can see that back in 2024 and since then, the 200 days moving average actually has been pointing downwards. The 100 days has been pointing downwards, and the 20 days actually has been also showing weakness. And if we zoom in to recent days, the 100 days and the 200 days continues to be pointing downwards as well. You can see that it's a bit of flattening previously, but continue to show some weakness. And the 100 day and then the 20 days also start to show weakness as well. Previously, we can see that it was trading back in August 2025. It was kind of trading sideways from that $45 to even that $60 or $65 region. So it has been trading sideways back then. Around this level, you can see prices actually came close to that $45, went up close to the 65, came back down to 45, and went back up to 65 again. But recently, if you notice, actually the price came close to the 45, and afterwards, in fact, it actually gapped down below that 45 level. So you see that this support, which was quite a key support level, it was able to hold for that few months, but recently it broke below this level. So I would say currently, if we look at the chart wise, it seems like there might be some temporary support near that 35 to 36 level, which is why maybe you are looking to DCA downwards. But if we look at the overall counter based on this, it's actually showing weakness, and prices actually get down below this 45 previously. So actually now it's some resistance near this 45 level. and I'll say there's some temporary support near this 35 or even at 36 level. But if prices continue to show more weakness like what it previously did back from 2024 to 2025, no, we wouldn't rule out that we wouldn't know how the price actually will move for this counter. But based on the trend and how this counter has been moving, it's actually showing a lot of weakness. And if you zoom in, actually you see that 45 was a key support level back then in 2021. And if we really see that prices broke below this level and came down to that 5, previously you can see that back then maybe 30 might be a support level that we are looking at. Sorry. So if prices actually, we look at it now, if prices continue to show more weakness and break below this 35, we wouldn't rule out that you might go back to that support of 30 or even more weakness afterwards. So looking at the trend wise and how the framework works, we wouldn't DCA down this counter because it's already showing weakness. Like what we always mention, we actually want to buy into strength and we wouldn't want to average down, but we actually want to average up. So currently actually you're holding some counters. First thing is if you're looking to DCA, I wouldn't recommend you to DCA. Next thing is actually if prices continue to show more weakness and break below this 35, maybe you might want to actually have a stop loss plan in mind as well. So actually we also cover this in our framework and our webinar on it's always good to have a trading plan when you enter. What is your entry price, what is your take profit price, and also what's your stop loss plan in mind. So since you're new here, like what we also mentioned, we have a webinar next Tuesday. So if you're free, you can actually sign up for the webinar and understand how the framework is. Yeah, but to answer your question, like what the rest has been mentioning as well, we wouldn't want to DCA down for this counter. I would say for now, since you bought some already, best is to hold and see whether it's able to stay above this 35 to 36 level. And if prices break below this level, you might actually want to have a stop loss plan in mind. So hope that answers your question, Saifo. And if not, I'll pass on my time to Bhavin to cover the next stock.
Right, thanks, Jai. Okay, so let's go for the next stock. Edward, hi. Welcome back. Good morning. Looking to buy MCD McDonald at $305. Would it drop further or would it bounce back? Right, let's see. Right here, we have MCD McDonald. Okay, I think McDonald has always been a very, very defensive counter. Recently, saw a little bit of up move, but also saw sellers come back in. Now, as you can see right here, we have a 1GT bearish signal that had showed up on the 18th of March, and then prices stumbled below that $320 support, previous support, where it was previously tested as a resistance, right? Previously it was tested as a resistance, that 320 gave way, came down. Right now we are seeing a little bit of weakness towards that psychological $300 level. So the intention is to buy close to 305, right? But what is the considerations? What are the considerations that we need to have? Firstly, all right, we have a 1GT bearish. We have prices recently breaking below a resistance, right? But we have that 100 days, 200 days moving average still very gently sloping up, right? Prices rebounded slightly off that 200 days moving average as well, right? So if you're thinking of getting in a position, I think it could be on the risky side of things, and you have to reevaluate that risk as well, because right now they're trailing resistance right around that $327, quite a bit of ways to get there, right? Quite a bit of ways to get there. You may see buyers start to come in close to that 300 to 305 area, which is your buy zone. Look at it. Every time it came close and then it rebounded from that level, slight rebound from that level. So I think many people are thinking of getting into those defensive counters because it's pulled back. I think some of the fundamentals are still good, right? The argument is the fundamentals are still good. Do you want to get in? So I think that consideration you must weigh out what is the probability? The probability of it potentially rebounding? Yes, it's there, but the probability of it potentially heading downwards, right? Breaking the 300 level upon weakness again, could see that next support of 290 being tested. So you could head back to where we were in November of last year, in July of last year, in October of last year. So I'm saying there is nothing stopping you from waiting, right? Nothing stopping you from waiting other than the fact that, only time will tell whether it will go back up above 320. Maybe there is where a better support to buy, a new higher support could come back, and then that's where you can potentially get in. Or here's the other alternative that you may want to also consider. You can nibble. The keyword here is nibble. Like Joey always say, nibble on that position, on that pullback. Don't need to buy a very, very big position. Why? Because you got some confirmations. Where the 100 days, 200 days is still looking good, right? You still have a buy zone, right? You're not buying very close to a resistance at this point, right? But you have a 1GT bearish. Okay, 1GT bearish. The situation may change. You want to move into a defensive stock. Great, no problem. Just nibble on it. Wait to see how it plays out. But it doesn't mean you nibble, you don't need to think about the downside. I think you should still have a trading plan. If you see another 1GT bearish signal come in, right, means maybe that 300 support is broken, you need to also consider a stop loss plan. Okay, stop loss plan. Defensive counter doesn't mean it will not come down, right? Consider a stop loss plan. Your losses will not be too wide. You took a calculated risk. That's what we call a calculated risk. We don't try to force any trade. It doesn't play out, sure, we exit. We wait for a potential stabilization of that 20 days of the prices, for that 1GT bullish signal to come back in. The 100 days, 200 days moving average also start to slope up a little bit more, and then you can come back in again. Right, so I think McDonald's still looking okay. We got one single 1GT bearish, buy zone being tested. Keep a lookout for it. I think have some alerts being set up close to that 300 level, above that 320 level as well. I think these are the key levels that we should watch out for. All right, so I think that is for McDonald's. I'll pass the time back to Joey to cover the next stock for you guys.
Okay, thank you so much. Bhavin, let's move on to the next one. And I think that's another stock that is asked by Othman Rahman. All right, good morning. What about Zscaler? ZS is a quote. On a downtrend. Very good that you noted that it is a downtrend indeed, right? It's a downtrend. Can I go in at $140? So the price now is at $141.50. All right, $141. Maybe you guys can help me out to help Othman. Do you think Othman should go in at $140 plus? All right, go in, right? Type Y for yes, N for no. Y for yes, N for no. Right? Help him out. Right? What do you guys think? Should go in or don't go in? Y for yes, N for no. Let's take a look. Like what's the audience view right now, right, for this stock? All right, let's take a look. Okay, Glenn, no. Tisato, no as well. Tini, Tiffy, Wifi, no. Thank you so much. All right, no. See if it break 140. All right, Joey Tan, no. All right, Brandon say wait as well. No, wait for high confirmations, higher highs. Right, very good. Okay, so and that's my sense as well. Right, that's my sense as well. I would say that, back to your question, right? First of all, very good that you mentioned it's a downtrend. So if it is in a downtrend, right, then why you want to think about going in, right? Because a stock like for example, right, let's say if you have got in, let's say, look at it, it was like $340 at $330, right, in November, December. 330 go until 140 leh. More than half price leh. More than half price, 57% leh. So if you just get in and you know that it's a downtrend, you can see that a downtrend can be downtrend, right? And of course, we got two bearish signals. The green 20 days moving average line is down a little bit lesser, but still down, down even more. Now is still down. So that there's no reason to get in on the stock that is in a very clear downtrend, not just in the short term, but also in the longer term. So if you look at the 100 days moving average line and the 200 days moving average line, right? So normally when we get into stocks, we at least want the longer term trend to be up, right? Because I mean, short term can be up and down, my short term, right? 1 week up, 1 week down, 1 month up, 1 month down. But in the longer term, you must at least be up, right? Because there's like a 6 months to a year kind of outlook, right? You must be at least up, right? In the short term, yeah, sometimes certain news like this come out, then no choice, you'll come down, right? But your longer term trend must at least be up. Like over here, right? When we get a bullish signal, the green line started to turn back up. Obviously, the long-term trend was up then. No issue. You want to buy, go ahead. All right, then you see, 48%, go ahead. Right? Bearish signal come out, then you take some profit, 48%, good enough, right? Get out, take some profit, you see starts coming down. Bullish signal, go ahead. Right? Long-term trend is up, the short-term trend is up, but you got bullish signal. Go ahead. I would say, I think it's maybe a good trade. It's a good upside reward probability, right? No problem. But now, not now, I mean since November, already come out bearish signal already. Bearish, go down by half price already. Short-term trend is down, long-term trend down. Plus, in fact, yesterday also come out another bearish signal. So we normally don't want to buy into weak stocks like this, all right? In terms of just getting in because it is cheap. Because I can tell you, when it was 220, I mean, it was 340, right? 340 go down to 300, cheap or not? Cheap. Or you can buy, right? 300 go down to 250, cheap or not? Cheap. You can buy, right? Then become 200, cheap or not? Cheap. You can buy, right? Imagine you buy. And now 140, cheap or not? Cheap. Right? But next month, I don't know whether it'll become $100, right? Still cheap. Right? So the thing is that we don't buy into cheapness. We buy into strength. We buy into confirmations, bullish signals, uptrending, momentum. That's what we buy into. All right, Ken? So that you don't just throw your money and see it go down cheap all the way. Does it make sense, about? All right, Ken? So probably not to buy at this point in time because all these signals are all pointing down, more down than up for sure. Right? So in terms of our 7-step checklist, quite clearly, this one got at least 4, 5, 6 out of 7 points saying it's down. All right, so we never want to buy into stocks like this. All right, so as I say, attend a free webinar next Tuesday. We actually break it all up for you, find out how you can have a tool like this, just to make it a bit clearer. All right, and when not just about, because I think people are always thinking about buying. All right, you can turn on any stocks and you want to buy a stock. I think that's fine, but I think sometimes it's also very important to know when not to buy. Right, like you see, some cannot buy one, some cannot, some maybe KIV, some put in a watch list first, some can buy, and some cannot. Right, so to know when not to buy as well. I think that's very key because I think most people just want to buy. You think like everything can buy, and it's true. I mean, you got money, right? You can buy anything, but don't waste money also, right? Use the money wisely and buy the good one. Don't buy the not so good one. Make sense? All right, Ken. So that is for this stock right over here called Zscaler. I hope that helps, Otman. All right, now let's move on to the next stock. Jai, back to you.
Joey, the next stock that I'm covering on will be actually on Google. So actually this counter, actually previously was on my watch list as well, but I think recently it started to show some weakness. So I think Hunan was asking, I bought Google at 250 and holding, how much upside, and I think someone else was also asking about, I think Tiffy. Tiffy was also asking about, Google has been dropping. What's the support and resistance for this level? So is it a good time to buy some? So, if you just look at the chart for this counter, right, if previously, when there was a 1GT bullish signal and you entered during this period, I think last year, May, even if you went out and you bought it at a higher price and with all the 1GT bullish signal, I think it will be up, close to 80%. But if we just look at the chart recently, it started to show a bit of weakness. And I think recently it hit the high of about 350, close to that 350, and came back down, and afterwards there was a 1GT bearish signal, and recently just on around 24th March, I think there's another 1GT bearish signal that appeared. So actually we just look at this chart for now, how the trend is, and how what we should do for this counter. So I think previously when it broke, it went close to that 350 and couldn't stay above that 320 support level. It came down and there was a 1GT bearish signal. It kind of traded sideways for a few months. Actually 1 month, sorry. So it traded around to about 300 to close to that 320 for 1 month, and just recently it broke below that 300 key support level. So actually if you see that this this key support level of 300 previously was a resistance, and back in November, it broke above this level, came back down to test this level once, twice, actually a few times, and recently it broke below this key support of 300. So you can also notice that the 20 days moving average also start to point down, and the 100 days moving average also start to flatten as well. So I would say currently, if you look at the chart wise, the key resistance now would actually be a 300 key resistance level. And if we look at, maybe you might see some temporary support near that, 280, which was previously around there was a support. So prices actually came close to that 280 as of yesterday. But if prices continue to show more weakness, the next support that you might see might be around that 260 level, which actually prices came to test previously back in September and broke above it in October. And that's also where the 200 days moving average is as well. So if we look at the chart wise, currently there's some weakness for these. So if TIFI you are looking at what is the support and resistance level for this counter, and is it a good time to buy now? I would say with the 1GT bearish signal that appeared, not only one but two of it, you might not want to actually enter for this counter. So you might want to actually monitor to see whether the 260 level key support level might be tested a few times. So for now, prices are showing weakness. The 100 days moving average is actually showing weakness. 100 days moving average is also starting to flatten, and it might even afterwards start to point downwards. And if you want, I would say for now, best is to monitor to see whether it goes back to the 260 level. What we want to see is when prices start to stabilize around that 260 level and maybe afterwards show more strength, that's when you might see that the 100 days moving average might start to come down, flatten a bit, then afterwards start to point up, and that's when the 20 days moving average also will start to point up. And when all three moving averages are pointing up, that's when you might want to reconsider to see whether you want to enter for this counter. And best, if by then there's a 1GT bullish signal that even appears, that might be another confirmation that it might be showing more strength and you want to buy into strength as well. So for TIFI, hope that's answered your question. And for Kunan, I think you bought it at 250. So previously you bought it around 250, could be around this level back in October. So back in October until now, if you previously got the 1GT indicator, you could have exit around that 320, which will be where you can secure your profit. But if you're already holding on and now it's already back to that 280, I'll say you actually still up about 11 to 12%, but currently it's near that temporary support of 280. You might want to closely monitor to see whether it continues to show more weakness. You don't want end up the price. Actually, this counter has been showing weakness for now, and if you continue to hold and prices go back to that 260, you might be close to your entry price. So you actually wasted up your upside. So I would say for now, if you want, closely monitor that 280 to see whether it's able to stay above. If prices continue to show more weakness, you might actually want to secure your profit just in case it goes back to that 260 and end up you are just back to break-even price. So hope that answers your questions for Google. And if not, I'll pass on my time to Bhavin to cover the next stock.
All right, thanks, Jai. Okay, so let me just change. Sorry. Okay, here we go. Okay, so Mini, RTX bought at 207 when long-term trend was up and short-term trend was a little bit sideways. However, short-term trend went down. Yep, came down recently, came off to 192. All right, so currently that means yesterday's price closing was 192. To sell or to hold at what level, please? Okay, what jumps out to me here is that just yesterday, this 1GT bearish signal had just came out. All right, it had just came out. You bought at above that 205. Previously was a support, so bought about 207. Let me just mark it right there for you. That is your entry price, and change this to red color. Okay, so previously you had bought above 205 support, and I think that was in fact a good entry, right? You saw that the 20 days was a little bit moving a little bit sideways. Okay, 100, 200 days still up. Okay, I think there was nothing wrong. Right? There was nothing wrong with that entry. So don't beat yourself up over there. And when prices come down, that is unpredictable. You will never know when prices are going to come down. So then now, with prices coming close, all right, very, very close, actually, in fact, testing the support for the last 2 days already. Right? Previously, this is a support. Actually come quite close to it a few times. The 190 level, that support is broken, or it could be broken, sorry. It could be broken, but you still have the 100 days, 200 days moving average pointing up. So I think you have to recognize that if the 190 level is broken, you could potentially hit downwards towards that 180 level, especially if the selling pressure continues. Selling pressure continues, that is a level to actually watch out for. With that 205 turning from a support into a resistance right now. So I think with that in mind, we have to take into account a couple of things, right? With that 20 days moving average already pointing down, you want to firstly set up an alert. I set up an alert, right click, add alert under the 190 level, maybe 188. You want to create an alert there. What's the second alert that you want to create? You want to create an alert close to that 205 resistance, right? 205 resistance, a second alert, right? So right now you are set up for prices could be heading back to this phase again, right? This entire phase right here from January all the way to March for about 2 months, prices just moving up and down, up and down, up and down within the range. So what does that mean? It means that if it happens and the prices start to move sideways a little bit again, is that opportunity cost okay for you? Right? So of course, I would have much rather with the 205 broken, the 200 psychological broken, 198, let go first. But right now it's already at 192. Right? So you may be considering that if it breaks out of that potential consolidation phase, that is when you want to move out of the position, right? Maybe under the 190, 188, 187. I think, yes, don't participate in any further downside already, right? Get out of the position, wait and see. Wait and see if we can see strength coming back to RTX once again, especially if the war, if it really extends out, maybe RTX could be one of the beneficiaries, right, from the war as well, from the tensions. But right now, it looks like no market feels that it is time to take some profits on it. So you see prices start to head downwards a little bit. But we found quite a little bit of a strong support at 190. It looks like buyers are keen to be able to keen to defend this level for now. And so I think in the nearer term, yeah, maybe you may not get out with profits, but if you get that 204 alert under that 205 being triggered, yeah, at least you can come back and then take a look. Then maybe that 20 days moving average has started to point up again. And great. Then maybe you want to start to shift your stop loss up, especially if that 205 give way. That is a new support, a new higher support that has formed again. Your upside, I've previously drawn this as well, could be upwards towards 220 or maybe even 230. All right, Mini, I think that is a very quick one for RTX. The nearer term trend seeing a little bit of weakness, longer term trend still holding up right now. Doesn't mean we don't want to move out of position if those three supports are being broken. All right, so now I'll pass the time back to Joey to cover the next stock for you guys. Joey?
All right, thank you so much, Mervin. All right, let's move on to the next one. All right, so yeah, good one on RTX, right? Very strong longer term uptrend. Unfortunately, we saw a bit of weakness in the short term. We got a bearish signals, but yeah, what if a new bullish signal were to appear? All right, what if the short term trend starts to turn back up? Right, that could be a really good counter, right, to put back in your long position as well. Now let's move on to the next one. I think that's asked by Andy. All right, Andy Lim. I hope you're still here. Let me just go to cover one of the stocks that you mentioned. All right. Came across these two uptrending stocks. Thanks for giving us a bit of context, Andy. All right. In these volatile times, is indeed right, very volatile times, but there are still certain sectors that are doing well as well. Okay. So you talk about CIEN, right? Ciena Corporation and Lights. All right, would like your opinion on these two. All right, okay, good. So I'll just cover the first one, and that will be CIEN, Ciena Corporation. Indeed, right, not too bad, right? Pretty good uptrending stock. You can see that these are definitely stocks that we want to think about buying as well, right? Long-term trend, red and blue line, both pointing up, red above the blue. In terms of the short-term trend, the green line, well, it's been up since November, December, up, flat a bit, even more, right? So trend indicators wise, in terms of the longer term and the short term, positive, right? Not too bad, quite okay. Now let's take a look at what is the resistance, whereby some selling have came back over the past few days. Well, quite clearly, it seems like it's around the 450, I think 450 just yesterday, like on Wednesday night. We neared the 450, a bit of a pullback. In fact, last night was a little bit of a pretty bearish candle, right? Look at this, right? Pretty bearish red candle. This is what we call like a bearish Marubozu candlestick bar. It means that it opens right at the top. Sellers came back. Sellers just push it all the way down. Sell. And even at the day end, right? They didn't even give way. They just, it closed somewhere at the day end, right? But there's no lower shadows. It's quite bearish. It's a pretty bearish candlestick bar. It means that on that day, last night was quite a heavy selling day. Doesn't mean because of this, then you'll crash all the way down. No, you can see previously also, we got a bearish candlestick bar, right? But next day also started to reverse back up. So these are all what we call bonus confirmation, just to let us know where are the price levels whereby we could see selling coming back again, right? So I think right over here, that's the zone. I think all these zones, because we're seeing two bearish candles coming out here, anything near that 450, it could be 440, 430 something, all right? Right over here, I think that's what we call a pretty heavy selling zone, So even though we are in an uptrend, in the longer term, in the short term, I think that that's where some selling can still happen based on the price actions we've seen from the candlestick, right? Now let's take a look at what could be a good entry. So so we're seeing selling near that 450 level, 440, 430 plus, right? So of course, doesn't mean we're seeing selling damage. You cannot think about getting in, right? It means that when we hit to those resistance, you could take some profit if you want. Right? You could get out if you want, right? That is what it means, right? It doesn't mean because we see a resistance means you will come all the way down. No, right? This stock is still strong. The uptrend is still intact, right? Just that selling pressure is coming out near the 450, right? So a good entry on dips, right, to the support level, that's where some buying pressure can come back again, right? And this good entry, I would say, seems like we're seeing a bit of support. Let me just show you right over here, right? I think 360, 360. So 360 was a little bit of a resistance. Look at this, right? Came down, touched a bearish candle, reversal, came down, right? And we actually attempted to break it last week, right? Last week. And 16th of March, and we started to push even higher. So this 360 could be what we call a horizontal support level. Any dips to near 360, 365, 362, 67, 68. Now it's what? Now it's 387. Still got a bit of space. So if it does head to those levels, I think that is where. Let's stabilize first. Don't need to rush. Let it stabilize. Maybe you can see a few good reversal candles coming out there. That could be a good entry. And you can see this 360 also coincides with where the 20 days, the green 20 days moving average line is as well, right? Which actually acts like a little bit of a dynamic support level, right? So 360, 350, I think that's where some good bargain hunting can come back, right? So I hope that helps in terms of when to get in. But maybe what I could share with you, very simple, right? In terms of the trailing support, one of the very powerful features would be this box right over here, the trailing support level. So you can turn it on. You can see we got bullish signals since December. All right, it was like about 210, 220 like that. There we go, right? Those trailing support, follow. In fact, we neared it, and then rebound from it. You can see right away, we neared the trailing support, right? You see this trailing support, give it space to breathe. All right, if you're above it, no problem. All right, even if, in fact, if you're near it, it could be a good entry to get in, no? Right? So you can see right now, we're still above it. So the trailing support is around that 340, right? So 340 to 360, I think all that could be, assuming that the support holds, assuming that the short-term trend is still up, all these could be levels whereby one could think about getting in on dips, right? Once it stabilizes, once we see some good, reversal candles coming back up. All right, Sen. So that would be for Ciena Corporation. The code is CIEN. All right, so let me pass on the mic to Jiayi to cover the next stock. Jiayi.
All right, thank you, Joey. So the next stock, actually, I was looking at what counters to cover. I think next stock that I'll be covering actually will be on AMD. So I think Joy Min was asking about AMD have been holding, wondering if it's reversing up. And I think user also was asking about bought AMD at 130. So actually, what should I do now? Buy, hold, or sell at what price? So let's just look at AMD for now. Okay. So for AMD, I think previously, if you just look back in 2025, it actually was showing quite a bit of strength, from the $100, went up to the 250 or even the 260 level. But if you just look at the chart recently, it's kind of trading a bit of sideways, from that 200 psychological level to that 260. So if you see previously back in August, prices actually came close to that 195 to that 200 level, came back down to test that 150 support level, and afterwards it broke above. It actually gapped up, and afterwards went to that 260, came back down to that 195 to 200 level. So I would say if you look at the chart wise, as of today, you can see that the 200 days moving average is around that 195, that 200 level. So prices has tested this 195 to 200 support level quite a few times and are able to stay above it. So near term wise, it's kind of 195 to 200 is a support level, and the resistance actually is near that 220. So you can see that prices actually came to that 220 to test quite a few times previously, and January it was able to break above for just a 1 month or less than that, came back down below that 220 and actually test a few times again. So if you notice, just the night before, it actually came close to that 220, and there was some selling pressure that came in yesterday night, and afterwards prices came back down to that 203. So I would say currently, if you look at the chart wise, overall it's kind of trading between that 200 to that 220 level. And if we were to turn on that trailing support and resistance, you can also see that the trailing resistance is also near that 220 to 225. So if you're looking, if you have been holding this counter, I would say currently you might see that it's kind of a consolidating sideways between that 200 and 220 level. If prices are able to stay above that 200, it's actually still a good thing that overall the long-term trend is still up, still doing okay. But if prices break below this 200 level, that might be a signal or a sign for you that there might be more weakness coming in. So for those who are actually holding to AMD, and if you are thinking of if you don't want to monitor and you just in case prices continue to show more weakness, you can actually set alert slightly below that 195 or even that 190. And if prices break below this level, you'll be alerted to come in to monitor for this counter. But for those who are actually thinking of entering or even or already have the counters, so for those who have the counters, if it breaks below that 190, you actually might want to actually secure profit just in case it continues to show more weakness, and maybe go back to that 150 level, which might be close to your purchase level. Or if you're looking to enter for this counter, best if prices are able to break above that 220 level and stay above it. And if prices continue to show more strength and break above that 225, there might be there will be a 1GT bullish signal that appears, and that might be more upside towards that 260 level again. So for those who actually are looking to buy, for now it's kind of trading sideways. So if prices are able to break above that 220, that might be a sign that there might be more strength coming in, and that's when you can actually come into monitor as well. So that's where you can actually set an alert, maybe close to that 225 or even at 226, when prices break above and there is a 1GT bullish signal that reappears, and you can actually come in to monitor again to see whether it's able to go back to that 260 or even higher afterwards. Yep. So, but for now, if you are already holding to it, I would say the key thing is to actually monitor that 190 to that 195. If prices break below this level, you might just want to secure profit, since for user you actually bought it at quite a good price at 130. So if we just look at it quickly, 130, to that 200 or the 190 level, that's a 50%. So you don't want your profit from 50%, end up you hold back to that 150, end up your profit might just be 16%. So for now, I would say since it's still holding above that 195 to 200, maybe you can still hold it. But if prices break below this level, you might actually want to secure profit. Yep. If not, that's all for AMD. If not, I'll pass on my time to Bhavin to cover the next stock.
Okay, so very quickly, let's run through the next stock. Alfred, hi, hopefully you're still with us this morning. Bought ServiceNow at 130, now it's trading at 104. Should you buy more to average down? Okay, so I think we still have about 135 of you guys here joining us here this morning. Maybe can we all help Alfred out a little bit? All right, just to interact as well with you guys. What do we think? Do we want to buy ServiceNow, right? To average down, right? To average down, maybe yes for a Y for buy, no for no buy, and all right. Let's see. We go. Brandon says no, don't really want to buy. ABC's not really, don't really want to buy. Harish also don't really want to buy to average down. All right. So okay. So I think Alfred, I think the crowd have spoken a little bit. Okay. So let's just see what is the potential risk right now if you average down. All right. So besides you're talking up some further capital, what is the further downside risk? What is the further downside risk? I think right now, if we just focus on the longer term trend, right, the blue line, the 200 days moving average above the 100 days moving average, and both of it are pointing down. Yes, we have a recent 1GT bullish signal that had appeared on the 5th of March. All right, prices trying to break above that 120, managed to hold for a couple of days. Then it tumbled down below again. The previous day, that 20 days moving average was heading up, as you can see. Then it started to turn down again, and recently we had a 1GT bearish signal that came in on the 24th of March. All right, so I think ServiceNow, I think it is software as a service company. All those companies haven't been doing so well in the past few months since February. Right now, we are testing that $100 psychological level. So if I were to just zoom out, then I extend that $100 line, you can see that this was where previously it was a resistance in 2023, right? Was a support in 2023 as well. Came close, tested it in October of 2023. So we are right back, rewind into 2 years back already. We are already very, very close to those levels since the past. And so we don't want to further add on your position. You bought at about 130. Great, okay. So maybe at this point 130, when prices actually break below that 120 level, I think that would have been ideal to actually just move out of the position. The losses will not be too wide rather than holding on to a position. Right now, it rebounded a little bit, then it come back down again. Is it going to rebound again? I don't know. Nobody can tell you as well. So I think you have to be a little bit more cautious. Be aware that once the 20 days moving average start to point down, a nearer term weakness definitely present. Longer term trend already is down since I would say from here, this point onwards, since May, it started to show signs of weakness. The 100 days already started to cross below the 200 days. So I think definitely we don't want to position ourselves to buy something that is in a longer term downtrend. If there are signs of like a reversal, right, like the 100 days moving average starting to point up again, flatten out first, point up, and then potentially crossing above that 200 days moving average, that 20 days pointing up at the same time. Potential signs of reversal, 1GT bullish signals that are present, right? These are confirmations of a reversal into an uptrend. Key resistance being broken. right? New buy zones being formed, new higher support being formed. I think these are the confirmations that we are looking at. These are the confirmations within the entire 1GT framework as well. All right, so that if that is something that we want to actually explore as well, I think there's the link is in the chat to actually attend the 1GT webinar. But I think right now for ServiceNow, definitely not thinking to average down, more of thinking of what happens if prices continue to head lower, right? Continue to head lower, below the $100 level, psychological support already gone. I think that is when you want to have a stop loss plan. So if I were to just turn on that trailing support and resistance, you can see, let me just move this line a little bit. Okay, that trailing resistance is right around that 120, right around that 120 level where previously it was a resistance as well, tried to break above, held 2 days, right? That whole scenario again. Now it is where that trailing resistance is currently at. So a break above this trailing resistance, hey, good. We may see another new 1GT bullish signals come in again. But is it able to hold above at that point of time? I think only time will tell. So what we want to do is we want to wait for further confirmations. Maybe you got to buy a little bit more expensive, but at least you will be scaling into a winning position or a winning trade or uptrending trade. But right now, if you have a position and it's weakening day over day, you start to see prices just heading lower and lower and lower. I think it's time to get out, especially in this entire market situation. Move your funds or move your capital, preserve the capital to deploy into something that is, I would say, maybe more opportunistic, more in your favor when the market is behaving in this manner right now. So a lot of the tech stocks are starting to come down. You don't want to position yourself to be overexposed in all of these stocks as well. All right, so I think that is for ServiceNow. Very quick one. I'll pass the time back to Joey to cover the next requested stock.
All right, very good. Let's move on to the next one, right? So now we have covered a total of, I would say, 12 stocks already, right? So let's just go, let's just go one more, or let's go one more round very quickly. Let's see. Okay, the next one would be this stock called ARM Holdings. Let me just go ahead to pull out the chat, right? Edward, I hope you're still over here, right? I bought ARM at $120. Should I wait to sell it around 165? It's not too bad. You got in at 120, so I think 120 would be somewhere over here. Not too sure whether you saw this bullish signal, right? Pretty good, right? I think if you got in here, if you saw this bullish signal, I think that could be a pretty good entry, right? 120, the first bullish signal. In fact, the past 1 week got another bullish signal and started to go up even more. So now it's 154, right? So you're sitting on some profits from 120 all the way to around $154. All right, pretty good. Now back to your question. Should I wait to sell it around 165? Around 165. Let's go to examine that, right, and see where could be the zones, all right, that you could think about maybe taking some profit, all right, taking some profit, and why, right? Okay, so you can see that for these ARM holdings, right? Well, the long-term trend, look at the red and the blue line, right? Look at the red and blue line. I would say since last year or last year, the red and blue line has been up a bit, down a bit. I would say mainly sideways. Like, it's not like those very nice ones. The long-term trend is up, no red above the blue, both pointing up, right? For the past 1, 2, 3 years, you see the red and the blue line, it is like a bit sideways, Of course, in the short-term trend, the green line, the short-term trend can be like down and then up, then down, then up, then down, and then now like going up again. That's the short-term trend. So short-term trend can change. I mean, it's short-term, right? So it changes, or is it more sensitive to price movement? Now, let's take a look at what has happened over the past 2 to 3 years since the long-term trend is pretty much sideways. So quite clearly, if I can draw this very key resistance for you, you can see right over here, I think 180, right? Every time we go there for the past, since 2024, two plus years, we go there, we always come back down, right? Come back down. Every time, I don't know why it's so, but every time we go there, it always come back down, right? So that is a very key psychological resistance level. I think, I'm not saying that it will sure come back down again, but I know if it does hit there again, I mean, that's where some selling can actually come back So if you're looking to sell, that could be a zone, all right, whereby if it nears it, not say must go there, near it. So how near? Near, that means I would say like, okay, so maybe over here you see like anything above 160, 160 to 180, every time we near, this one didn't even go to 180, I think go to like 170 and then come back down. So you see, near 170 something, come back down. So anything above 160, I think 16. So yeah, should I wait to sell it around 165? Possible, right? Could be 165, could be 168, could be 170, could be 173. I don't know. Don't ask me exactly what price. I also don't know. But I know that this zone here, right? That's where some heavy selling can come back again, right? So good that we got some bullish signals over the past one over month, right? We're starting to see that reversal, but I think nothing wrong to also lock in some profits as we hit to that very key resistance level. Why? Because as I say, we have been hitting it for the past 2 over years, and sellers have came back. We have retraced down 4 or 5 times. All right, so nothing wrong to take some profits, or maybe all profits if you want. All right, and if it does break the 180, and then that's different, because if we break the 180, we might get a new bullish signal, and that could be another entry even higher to ride the next phase of upside. Right, but before that happens, nobody knows whether you break it. Right, sellers could come back right at that same zone as well. Okay, so that's for ARM holdings. Not too bad, you're making some profits, but that is pretty much the range in terms of that resistance level. In terms of the support, right? I mean, just to share with you, can see that quite clearly this stock has been doing like up, down, up, down, up, down, up, down, up, down, up. Again, I don't know whether you'll come down, right? But that is the sideways movement in the long term. Okay, so 160 to 180 could be a good zone to lock in some profits. All right, if it does hit over there. Now, let me pass on the mic to Jia to cover the next stock. Jia?
All right, thank you, Joey. So the next stock that I'll be covering on will be actually on C Limited. I think Styler was asking, C Limited. Thinking of buying at 78. What's the trend? No position now. So Styler, so if you were asking me about this counter back in last year, maybe 2024, then 2025, I would say no, this trend. Actually, the stock looks very good. It has been breaking like resistance over resistance and going up higher. So if you see back in 2024 to 2025, it's been showing strength long-term wise, 100 days, 200 days pointing up. The 20 days moving average sometimes goes up, consolidate a bit, goes up, come down a bit, but still continue to show more strength. But if you are looking at this counter as of today, if you look at it, no, it's actually different now. Previously, when it hit the 200, afterwards, it start to actually show some weakness. Then you can notice that actually start of last year, October onwards, it actually broke below this maybe 117 support. 170, it actually broke below this 170. There was a 1 GT bearish signal that appeared. Back then, if you still look at it, it was still okay. 100 days and 200 days moving average was still kind of pointing up. But afterwards, as the stock progressed, you can see that it actually didn't stay above that 170, came to that 150, break below it, 1 GT bearish signal appear again. Afterwards, prices came to the 120, kind of recover a bit, went to 150, but couldn't break above. And you see that there was this is kind of like a bearish candlestick. Sellers actually came in to push price back down, and it came back to test that 120 level again. So this, at the start of the year, it was actually staying above that 120, but afterwards broke below that 120, show more weakness. So as of now, if you see the chart wise, it's very clear that the 200 days moving average, the 100 days and the 20 days moving average are all pointing down. It's actually showing weakness in terms of the short, even the long term. Prices are able to stay above this 79 to 80 level these few days, but we wouldn't know whether how prices will moving forward. But if you look at the chart wise, with the 1 GT bearish signal and the short-term weakness and the long-term weakness, currently you might want to wait and see how the stocks, the price moving forward. If prices are not able to stay above this 80, wouldn't rule out that back then 60 level was actually a support level as well. So if prices are not able to stay above this 80 level, you might see more weakness back to even at 60. So for now, I would say prices are actually showing a lot of weakness, 1 GT bearish signal. So if you're looking to enter for this counter, I'll say for now, wouldn't recommend. No position, that's a good thing. Wait for stability first. No, if prices are able to stay above this 80 or even recover back to above the 100, that's when you might see that the 20 days moving average will start to actually flatten first and show more strength. Then afterwards, you might see that the 100 days flatten and show more strength. And afterwards, the 200 days will show more strength afterwards. So for now, with all the weakness in the long term and short term, I would say it's a good thing that you have no position as for now. Best is to closely monitor first. Maybe for this, it might not be a stock to enter for now. You might want to look into other strong trending counters that might have more upsides. Yeah. So for now, for this counter, I would say best is to just maybe if you want, put in your watch list so that you can see it from time to time. But for now, wouldn't recommend to enter. Yeah. So hope that answer your question, Styler. If not, I'll pass on my time to Bervin to cover the next stock.
All right, thanks, Jay. Okay, next stock. Here we go. I think this one I have to cover one. What price to buy Nvidia? I think Vincent was also asking, interested to buy Broadcom, Micron, Nvidia, Alphabet. All right, what are the potential buy zones, please? Okay, so let me just switch up the charts. Here we go. I have turned on all the signals, but I can just very quickly, I just want to focus on the buy and sell signal. All right, so we have a 1GT bearish signal that appeared roughly about a week ago, but prices are heading back towards that 170 support level, about 165 upwards to 170. This is what we call a buy zone that we have mentioned multiple times, I think, during this AMAS as well. So you can see their prices have been trading within this range, from July of 2025 all the way up to now, more than 6 months, between 165 upwards to 200. Had a couple of days above the 200, but subsequently came down again, tried to test the 200 level once again in February, but just couldn't break above it. All right, just couldn't break above it. But we see multiple rebounds, multiple times buyers are keen to accumulate on the dips, to get in for a potential swing position trade for between 165 upwards to 200. Will it still hold up? Will this entire range still hold up? Right, we got bearish, bullish, bearish, bearish, bullish, bearish, bearish. These are signs of a sideways move. Right, multiple cancellation signals out of each other. These are signs from the 1GT Pro indicator that there are potentially buyers and sellers. Sellers waiting at 200, buyers waiting at about 165 to 170. I think these are the levels that we want to watch out for. Right, so yesterday we came closer to the 165 level, 170 level, but not much of a rebound just yet. All right, so JC, if you want to actually position yourself for potentially maybe just a position trade upwards to 200, I think let's wait. All right, let's wait to see what happened to the chart. Let's wait for a couple of days to see. We're okay to buy a little bit more expensive. Okay, buy a little bit more expensive. It's fine. Right? We can position ourselves for entry, maybe 175, something like that. If we see potential bullish candlesticks coming in, bullish signs that are coming in. Because right now we have that 200 days moving average. 100 days moving average, not flat, it's down. Let's wait for it to be flattened out a little bit first. Wait for 20 days moving average to at least, flatten out, point up first. We got that 200 days still pointing up. That's great. That's fine. Let's hope it stays that way. But ultimately, we want to follow the trend. So let's wait for the trend for a little bit. But at least we have a buy zone. Right, we have a buy zone. Maybe we will see another 1GT bullish signal that could come in. Right, we can take a small position, ride it up towards that 200 level. But ultimately, we have to think about our entire checklist, right? We have to think about whether there is sufficient points in the checklist to show that strength is coming back. We're not going to be buying on weakness. I don't think we should be buying on weakness, especially with all these tensions going around. Next thing you know, the 165 level is broken. Then you need to have a plan as well. Right, so it doesn't mean buying at 165 must rebound for you. It's just the probability of a rebound could be a little bit higher. But if it breaks down, we want to have a plan to get out as well. Okay, so I think Nvidia, very clear cut. So far, I think one of the better Max 7 stocks from last year that is still pretty much holding up in its sideways consolidation range. All right, so without further ado, I think I pass the time to Joey to cover the next stock for you guys.
All right, thank you so much, Bhavin. Let's move on to the next one. So I think we've covered a total of 15 stocks already. I know there's still a lot. I calculated there's more than 50, 60 over stocks, right? Apologies if we cannot cover all of it, guys. We try to do our best. I thought maybe let's just do one more round very quickly. But before I do that, let me just go to list all the stocks that we have covered so far. So we have covered it. We will not cover it again. Also, you can watch the replay. Make sure you hit the subscribe button to my YouTube channel, on Facebook as well. Follow so that you can watch the replay on the stocks that we have already covered. So very quickly, right at the beginning, I covered the markets, the S&P 500 index, and even the Dow Jones, right? And the very first stock that I chose that I covered was MSFT, Microsoft. Number 2, Micron. Next one, Unusual Machines, right? Next one will be ConocoPhillips. Next one, NVO, okay? McDonald, Zscaler, Alphabet, GOOGL, right? We have RTX Corporation, we have Ciena Corporation, we have AMD, ServiceNow, ARM, C Limited, and Bhavin just covered on Nvidia, NVDA. Now let's move to the next one. And that would be, I would say, I think 2 of you were asking about it. Let me go to your comments and let's see what it says, right? I think we have Rebecca. Hi, Joey. All right, I bought SoFi, SOFI at $24. What do you think of the outlook? So you bought it at $24. Now it's about $15.87, right? So it came down a little bit, right? So later we can see if what should you be doing right now. Maybe by right should not have bought, right? But never mind. Later we'll take a look at it, right? I think we have one more view asking about SoFi as well. Skyfito. All right, SoFi can enter. Okay, so I think Rebecca, you bought already went down. Skyfito is asking whether can enter or not. Is it can enter at US $16? They're looking to buy. Right, looking to buy. Okay, let's go to look at SoFi Technologies right now. The code is SOFI. So quite clearly, I mean, for SoFi Technologies, I'll not go too far, but every time we get bearish signals, that was like last year, you can see that we start going down, right? But when the bullish signals comes out, that will be a very good confirmation of the reversal, all right? And we did all the way up, right? So very strong rally, I would say, from May last year all the way to October, okay? However, somewhere around November, we got the one GT bearish red color signal coming out, right? Not last month, guys. Not even the whole this week or last week when the Middle East started. I think this November already came out already, right? So by right, I think we mentioned as well when my team, right? Whereby when we get a bearish signal, we try not to buy lah. Why? I mean, it's a bit weaker, right? It's weaker already, right? Plus, you look at the green 20 days moving average line, also start to turn down. All right, January turned down even more. Now it's like still down, but lesser, right? But still down, right? So that's another confirmation whereby the longer term trend is down, and also the short term trend is down. So back to Rebecca. I think Rebecca, you mentioned that you have got in around 24. All right, so if you got in around 24, so it could be 2 things. Like if you got in around 24, is over here. So this is around $24. So my question to you is that when you get in 24, is it over here or over here? All right, over here when it was like in August going up that time, right? Is it over here or is it over here? Rebecca, if you are still over here, maybe you can time the chat, right? So I can go into like analyze for you, right? So when you got in, was it like in August or is it like in just like in January? Let me know. Right. If you're still here, Rebecca, let me know. Okay. So never mind. Let me go to, I think maybe Rebecca is there. But the thing is this, right? Let's say you have got in over here in like August, right? At maybe $24. And that's fine. That's fine. Because you can see at the point in time, the bullish signals, it started to push out. It was still looking good, right? But when it started to come down here, and if you entered like in January, whereby we got a bearish signal and the trend was down, that is by right not a meaningful trade setup, right? It's not a setup whereby you want to think about buying, right? Because you're kind of like going against the trend, right? So I hope that helps in terms of how just by having a tool like this, it can tell you when not to buy also, right? When not to buy, when not to get in as well, right? But no choice, like you get in already, maybe you did not see this thing, right? We get in already, right? And it came all the way down. By right, you would want to have the plan to get out, to reduce, to trim, right? To even cut loss, all right? Like for example, you can see we broke that $24, so 24, right? It's a bit of a support level, rebound, but we broke the $24. That could be actually 23 something should have got out already, 22 something should have got out. But you see, now it's become 1587, right? So by right should have a plan to reduce, to manage the risk, right? We don't want to hold a stock all the way down, because that's where you could, incur even more losses. All right. So back to your question, I think we have Skyfighter, right? Can enter at US $16. So very lucky that you never entered at 24 or 23 or what, right? But you can see now $16, now it's 15.87. Okay. Well, we as I say, we try not to buy into weakness. Right? We don't buy into weakness. We don't buy into cheapness. Okay. We buy into strength. But as of now, bearish signals are in play. Short-term trend is down. In fact, I think we may even be, attempting to break the $16. So 16, maybe 16.50. If I can draw it for you, all right. The past few days, all right, it was holding above 16.50, right? But last night, boom, right, it went below, right? What does it mean? Not good lah. That means the temporary support that we've been trying to hold over for the past one over week also cannot take it really, right? So there could be more weakness. So we don't want to buy a stock whereby it's down, bearish signals, plus the support still broken, all right, and there could potentially be more selling, all right. And how low can it go? I don't know, right? I mean, it could go to it could be 14, it could be 12, it could be previously around $10, $8, all right. Not saying that you're surely good at, but I mean that was where we were previously, right? So that could be the downside. We don't want to get in because there could be more selling. There's no clear confirmation of a reversal. We see all these things here, bullish in April, May. Okay, fine. Then that one you can get back in, but now don't have. Make sense? All right. So don't need to rush to get in. Okay. I hope that helps. I hope it's still over here, Skyfighter. All right. So let me pass on the mic to Jia to cover the next stock. Jia.
All right. Thank you, Joey. So the next stock that I'll be covering on actually will be on HPE, OLED Packard Enterprise. Yeah. So hopefully, Kenneth, you're still here. So is it a good time to enter for HPE? What's the level to consider? So okay, so for this counter, I was just looking through, back in 2025, it was actually, around at $12, $11 plus. Then afterwards, it kind of showed more strength. But since last year, July, actually, if you notice, this counter has been trading kind of like sideways from that, $20 to that $26 level. So you can see that, prices actually came in August, afterwards went to that $26, came back down to test that $20, went close to that 26 again, came back down. So actually now, recently, it's actually close to that $26 level again. So just the day before, it actually went up above the 26, but sellers came in to push down the price. And you see that yesterday, there were also sellers coming in as well. So if you're looking to enter for this counter, if you just look at the chart wise, the 100 days, 200 days are actually pointing up, and you can see that the 20 days is also pointing up. And there's 2-1GT bullish signal that appears. So it actually is a good indication that there might be more strength and more buyers that are interested in this counter. But if you are looking at this chart now and you are thinking of whether to enter now, it might not be a good time. It's because it's near a resistance level. We wouldn't know whether you'll be back in October when actually prices not able to break above the 26, came back down to that $20 level. So I would say for now, if you're looking to enter based on the trend, this counter is still not too bad. The trend is still quite strong. But if prices are not able to break above this 26, you might see that it might come back down back to that $22 level first. And if it's able to stay above, then you might see some consolidation sideways. So for now, if you are looking at a chart wise, if we were to turn on the trailing support, it happens that the trailing support is actually also near that $22 level. So previously, back in February, it actually tried to break above this $22 level quite a few times, but couldn't break above. But just recently in March, it broke above and went up quite strongly. So $22 might be a entry level or entry zone that you can consider to enter for this counter if prices are able to come back down to this level. But we wouldn't know whether it's able to come back down to this level. So another entry level might be when prices break above the $26 level. So you can see that previously it couldn't break above 26. Recently it tried to break above 26 but couldn't stay above it. So if prices are able to break above this 26 level, that is actually called a breakout strategy where you might see that this resistance might turn into a new support level, and there could be more upside towards that. Just doing a simple projection from 22 to 26 level. The upside could be towards that $30 psychological resistance level. So this could be another potential entry level for you. So hopefully that answer your question on what is the level to consider. So if prices are able to come back down to that $22, you might consider to enter around this level, or if not, another way is actually when prices break above 26, you can actually enter when it breaks above and stay above, and the upside could be towards that $30 level. So if you don't want to closely monitor this counter, you can just by setting an alert by when prices cross above that 26, or if you want more confirmation, that when it breaks above that 26.5, you'll be actually alerted, and afterwards you can come in to see whether you want to enter for this counter. Yep. So hope that answer your questions for HPE. If not, I'll pass on my time to Bhavin to cover the next stock.
All right, thanks, Jai. Okay, so before our bonus stock for today, let me cover the last requested stock. Not really a stock. Andrew is asking about gold. All right, so I'll cover the ETF GLD. All right, in the local context, I think it's 087 is the SGX counter, but this is listed on the US market, so just take note. So here we go for GLD. Previously, it was looking quite good, right? It was holding up very, very well above that 450 support. 450 support holding up since the mid of February all the way until 18th of March, right? Last week there, it was where prices dipped below the 450 level, not really being able to recapture the 450 support, and we tumbled downwards towards now. Yesterday's close was slightly above the psychological support of 400. It closed at 400.80, 80 cents above that psychological level. So I think right now it's quite hard to say for gold whether it's going to be potentially heading up. People use it as a soft hedge sometimes. In the more recent days, the hedging mechanism has seemed to become more and more speculative, in the sense where it's moving a little bit more erratically. All right, so a lot of people are still looking at gold. There are still volumes in of trades in gold as well, but we have to monitor the key support. All right, so with that 20 days moving average already pointing down, right, green color pointing down right here, the 100 days, 200 days moving average is still looking good at this point. But if that 200 days, if that 400 psychological support gives way, I think the next thing you will see is that 100 days moving average will surely start to flatten out and maybe even start to point downwards already. And we have the next support right at the 360 level. So I don't think you should be rushing in to buy GLD right now. I think it looks a lot weaker as compared to about a month ago. If you ask me at about a month ago in February, with that 20 days moving average, pointing up, 100 days, 200 days pointing up, maybe slightly pointing down a little bit after that subsequently, and still after that pointing up. If you told me back then it was the entry looks good, does it look good? Yes, definitely it looks good at that point of time. But right now, I think the nearer term weakness looks to be a little bit extended. It looks to be a little bit extended. We don't know whether it will continue to play out. The weakness will continue to play out. So I think for GLD, I think we have to do something a little bit different. Instead of adding an alert for the prices, we're going to add an alert for the what we call the 1GT Pro indicator. We can add a buy or sell alert, right? A buy or sell alert, just to have both. So in the way where if prices continue to weaken, we got a continued 1GT bearish signal, we'll be alerted. If prices push higher and we have a 1GT bullish alert, we will also be alerted. All right, so this is GLD on the US market. But if you would like to trade the Singapore market, right, it's 087. 087 would be the code. And I believe if you are a client of Joey's, also under Phillips Securities, you may have also seen us post out newsletters covering GLD, right? So if you are looking to trade the Singapore market, you surely need a brokerage account. So I believe a lot of you guys here are Joey's clients in Phillips Security. So maybe we want to give you that acknowledgement as well. We also want to thank you for your time for joining us this morning as well. So if you are a client of Joey's in Phillips Security, maybe you can type a C in the chat so we know you are here and we can acknowledge you as well.
Yeah, I think we have quite a lot of clients joining us like every Friday. Like, let's see who is a client of mine in Phillips Securities. What's a client? That means you have a trading account under me in Phillips Securities. Type a C, guys. Type a C for client. If you're a client of mine in Phillips Securities, I want to just acknowledge and just thank all of you for just joining us. Thanks for support as well in the trading account. Simon, definitely, right? ABC, hi. Chong SY, Chong MY, Hope, Brandon as well. Good to see you here. Kelvin, Klein. So definitely quite a lot of clients joining us, right? But some of you may not be a client. Some of you may not be a client. Maybe you're just scrolling through YouTube and Facebook. So maybe what we can do is just, I think I placed the link in the chat, but let me place the link in the chat again. For those of you who are not yet a client of mine, or not yet a client of mine in Phillips Securities, what you can do, guys, is to find out how you can become one, all right? Why do you want to become a client? Like many of our clients over here, why? Well, because if you're a client of mine in Phillips Securities, that's where you can get some of our top ideas daily. Many of our clients say so many. Your Francis, hi, Christine, Harish. You can check with them now. You can get some of our top ideas daily by WhatsApp for free. At no additional cost, right? At no additional cost. So I'm not too sure where you're trading, but basically, if you are trading, then you need a trading account, right? You need what we call a trading account. So if you are trading and you have a trading account somewhere in Singapore, but then you don't get any service from your own broker, the link is right in the chat. Click on it, find out a bit more as to how to become a client. Like many of our clients over here, to get some of our daily ideas by WhatsApp for free. You do not pay anything more. It's the same as whatever you pay when you're trading, right? So like that, so this way you get some service at least you got some personalized WhatsApp. You can contact my team by WhatsApp, and we try our best to respond quite fast, rather than like a hotline. You call, wait 5-10 minutes, don't know who pick up, right? You try and call for ask for advice. You see what happened, Yeah, so link is right in the chat. Find out a bit more, right? Join many of our clients over here, right? So thank you so much for those of you who are clients. Really appreciate your support, right? Thank you. We have Eric as well, Video Junkie, right? Jimmy, Klein. Okay, so the link is right in the chat. Link in right chat for those of you who are not yet a client of mine in Phillips Securities. If you do not have a trading account under me, okay? Now, I know that it's supposed to be like one final, like last stock already, but I was just looking at the comments and I saw two more of you. In fact, okay, maybe I can just cover one more final stock for today before we go to the bonus stock. Okay, let me just go to share my screen right now, okay? And that will be Coherent Corp, right? Why am I covering Corp? Because I think the two of you were asking about it. I know like Patrick Vieira, I'm thinking of taking a position on COHR. Is this the right time? All right, we have TFTF as well, right? Can you share more on COHR? If it's a good time to enter, right? After yesterday drawdown, all right? So I think two of you asking about COHR. I think TFTF you asked about 2 times. So I thought, let me. All right, sorry to keep you waiting, but I try my best to cover the very final last stock. For those of you who really cannot never cover already, sorry. All right. Hopefully you can join us in the next AMAS session. That's where we can try our best to cover more stocks, right? So very final one, COHR, Coherent Corporation, right over here, right? $243. I think not too bad. I think this stock is definitely in an uptrend. We got bullish signals April last year, bearish one came down for like 1 month, all right? September, October got another bullish signal, and then all the way up, right? Long-term trend is up, short-term trend is up, bullish signals are in play. In fact, we can also see that there is maybe a little bit of a support over the past 3 weeks to a month. It seems like some support around that $230, right? So 230 seems like a pretty good support, right? For now, all the way to the $300. So 230 to 300, it's about $70. Right? That's the range, $70 range, right? So yeah, last night we saw a little bit of a pullback, but we are still kind of like above the 230 support level. You can see that's where we have rebounded. From here, rebound. I don't know whether it will rebound again, but that is where some good buying pressure can actually come back again. So if you're thinking about entry, right, I think that could be a good zone. I mean, don't need to rush. I mean, let's stabilize around there first, right? The thing is good is that at least this green line is not really pointing down. Remember, we have some of them whereby the green 20 days moving average line is pointing down. Those then you want to be careful, don't want to buy. But this, it's kind of like consolidating sideways. Support has been found around 130. So if we continue to hold above that 130, sorry, not 130, 230, 230, 235, 232, anything on dips there could be a pretty good entry, right, to ride that potential reversal all the way back up to that $300. That's like about a 27% upside rebound, right? So what we can do is also to turn on another feature. I mean, the trailing support that we talk about as well. Let's turn it on. And let's see what it says. You can see, so when we got bullish signals since September, trailing support popped up. Yes, follow, right? So every time we near the trailing support, rebound. We near it, rebound, right? So this trailing support, as I say, give it the space to breathe on. You're above it, then you relax, right? Chill, right? So you can see, of course, we're still above it, right? In fact, it's like somewhere around 226, 227, still slightly below the 230, so we're still above it, so still okay, right? If we near it, right, you can see that's where some buying pressure can come back again, right? So that could be a good entry, all right? Of course, build a plan, right? Of course, if we, if we were to break the trailing support, if a bearish signal appears, and then, confirmations are all starting to point down, then have a plan to get out, but if not, still okay, right? Bullish signal since September, still showing for now. Okay, so that's for Coherent Corporation. All right, and one thing I want to share with you guys as well, besides the webinar, is that, we actually, right now, what we're using is what we call the 1GT Pro indicator, whereby there are some advanced features, like trailing support. I can turn on everything, and then you'll be like, boom, like super messy. You'll be like lost, right? So this is the Pro, the advanced one. But what happens is that we actually do have what we call the light version, right? And we actually have a 14 days free trial to the one good trend, the 1GT light indicator. What's the difference between the light and the Pro? Well, the light one is a simpler version. That means you can turn on the first box, the bullish and bearish signals, and also the 3 moving averages, the green line, the red line, and the blue line, which is pretty much what we have been talking about, right? It's a simpler version. Of course, don't have all the advanced stuff, So you can test drive the one good trend light indicator for free, right, for 14 days. All right, the link is right in the chat, right? Click on it, test drive it, and that's where we have this one good trend light indicator, whereby I think it can help you based on the bullish and bearish signals, all right, to know when to get in and when to get out, together with the moving averages as well, right? So the link is right in the chat to test drive the 1GT light indicator. Okay, Ken? So there we go. Now, let's move on to the bonus stock, the very bonus stocks that I think you guys have been waiting for it, right? And let me cover the very first bonus stock I'll share with you guys today. And that will be this company called CVX, Chevron Corporation, right? So here it is, right? This is Chevron Corporation, one of the stocks that we have in our watch list, in fact, since last year, all right? And of course, now this is the energy play, right? And yes, woke up, yes, pushed even higher over the past 2-3 weeks. But even before that, you can see that we actually, since December or maybe beginning of January, right, we have 2 1GT bullish signals being triggered. We were actually capped below the 160 psychological resistance for most part of last year. We neared it, we came down. We neared it, we came down. But somewhere around like January, 2 bullish signals. We broke the 160. That's why we covered it as well. You can see the green line that was like very boring, flat, or very boring last year, started to turn up as another confirmation, right? The long-term trend, look at the red and blue line, also started to firm up more strongly, right, in terms of the upwards direction. And there we go, right? Green line still pointing up. So long-term trend, short-term trend is up, all right? Yeah, of course, it's gone a little bit higher from like about 160, 170 to about $207 right now. So why am I sharing with you guys this stock? Well, as I said, the play right now is pretty much back to the energy sector, a bit of oil and gas sector as well. That's where we are seeing strength. So this stock could be one of those whereby you could, if it escalates, right? If we are still seeing oil prices remaining volatile and high, all right? And even if the war were to end, right? Thank God, right? If it were to end as well, it will not be so quickly that oil prices will start going down, and then the Straits of Hormuz, all the shit can start flowing through, and then everything all back to normal within like 1 week or 1 day. No, it will take a few months to get back to normal, right? To get back to war conditions, right? Because all this has already been, oil fields has already been destroyed, right? Like for example, in the LNG facility in Qatar that got hit, it takes about 5 years to repair the oil field, right? To make sure that the refineries are back in shape to refine and start storing the oil again, right? It's not like 1 week, 2 weeks can repair it, right? So it takes time, right? So that's where all these oil prices will still remain elevated, right? Still remain elevated. Couple of months, and these energy plays or energy sector stocks can still be strong, right? So this way you could write stocks like this. So for Chevron, I would say 200 would be a pretty good horizontal support for now, right? That's a psychological level. 200 to maybe even, anything from 195 to 200, that's where I think some bargain hunting could come back on dips. If it does hit there, good. If it does hit there, good. In fact, we could also turn on the trailing support, right? Let's turn on the trailing support and see what it says. You can see it is somewhere around that 195 level as well. So anything from 195 to 200, if it does dip, could be a good entry to potentially write even more upside, right? Resistance, 210, right? 210. If 210, we're seeing a bit of selling over the past 3 days, but if 210 gives way, targets could be revised to 220, maybe to 230 as well. Can? All right, so that's for Chevron Corporation. The first bonus stocks, CVX. Okay, so I'll pass on the mic to Jia to share his bonus US stock for today. Jia, go ahead.
All right, thank you, Joey. So my bonus stock will be actually on this counter, Lockheed Martin. Sorry, just give me a sec. Yeah, so I think this counter has been showing quite a good strength recently. Actually, back in last year December, there's 1 GT bullish signal. So previously it was kind of kept under that 520, and afterwards it broke above that 520 and start to show more strength. And if we were to zoom out, actually back in 2024, the highest it actually hit was about 600. So back in February, actually broke above the 600 level as well, and came close to that $700 psychological resistance level. You can see that prices actually went up to close to the $700 psychological resistance level, and recently it came back down to the 600 support level. So overall, 100 days, 200 days are pointing up, but if you notice, the 20 days moving average is kind of pointing down and start to flatten. But if you were to look at a chart wise, it's overall still quite good. And if some of you guys who don't know what is this counter about, with TradingView, you can just scroll down to the bottom to see what is this counter about. So those who actually want exposure to aerospace or global security, this can be a counter that you can look at. And if we were to turn on that trailing support and resistance, you can also notice that actually prices came close to that trailing support of that around 607, and afterwards it kind of rebounded up from this level. So I would say 600 to 607 might be a good entry level for this counter if prices are able to stay above this level, and the upside target might be towards that $700 or even more if it's able to break above that 700. But I would say for now, if you want, you can monitor for this counter to see whether it's able to stay above this 600, and if prices start to show more strength, that's when maybe you can enter for this counter and ride the wave upwards as well. Yep. If not, basically that's all for Lockheed Martin. Yeah. If not, I'll pass on to Bervin to cover his bonus stock.
Right. Thanks, Jai. Okay. So last but not least, okay. So my bonus stock for today will actually be Vertiv Holdings. All right. So a little bit different from Joey's and Jai's. Lockheed Martin and Chevron Corp, Vertiv Holdings is a company that's also within the AI space, is more of a build-out play for the AI because they are dealing with the infrastructure build-up. Right, so I think for Vertiv Holdings, it has been holding up very, very well. Right, it's on our team's watch list for a reason, right? It's been holding up very, very well above that 250 support level. Right, the 250 is currently still holding, and we are in a buy zone as of yesterday's close. We are still in a buy zone, and you can see that the trend for Vertiv has been rather stable. All right, has been rather stable. If you have noticed that, let me just change this here. Prices consolidated for a while, heading up. Consolidated for about another month, headed up again, and then right now we are just pretty much trading between 250 upwards to 290 as well. Our team also has targets that if that 290, right, 290 resistance gives way, the upside towards the 330 level could be our next target. So we have, of course, also set up multiple alerts. As you can see, black color, all these are alerts right there for us to be alerted if we receive or if we see prices heading towards those levels. Right, so I think Vertiv still showing good signs, right? 3-1 GT bullish signals. Longer term moving averages are still pointing up, right? That 20 days moving average is a little bit flat, maybe a little bit pointing down right now due to the sell down from yesterday. Rather bearish candlesticks, but we are looking to see if that buy zone holds up. And that would mean that the consolidation range, the sideways movement starting from March, the higher support level is still holding up. All right, so we have 3 different bonus stocks today. All right, Chevron, Vertiv, Lockheed Martin. And if you are curious on how we actually get these stocks, how the team actually builds their portfolio, their watch list, their own personal watch list, Joey's personal watch list, I think you have to attend Joey's 1GT webinar. That's happening next week, Tuesday, 7:30, the last webinar for this quarter. The last webinar for this quarter. I think I'll place the link in the chat once more for those of you guys who haven't, been able to register for it, especially. I think you should take a little bit of the time to actually just fill up the details very, very quickly. You will receive the Zoom link reminders, so you will definitely not miss out on the upcoming webinar. All right, so maybe I'll pass the time back to Joey for now to wrap up today's AMAS for you guys. Joey?
All right, thank you so much, Bhavin. And then there we go, right? There we go, guys. We have pretty much covered, the 3 bonus stocks. First stock from me will be Chevron, CVX, right? CVX, GIA covered Lockheed Martin, LMT, and Bhavin just covered on Vertiv Holdings, right? VRT, right? So yes, I think what Bhavin has mentioned is correct, right? So essentially, we have one final webinar next Tuesday, right? One final webinar next Tuesday. I'm not too sure whether we're doing any more, right? But pretty much the last few, all right? And link is right in the chat. Click on it, and that's where I'll share with you guys a little bit more about the entire one good trend strategy and perhaps how to have a tool like this, right? The 1GT Pro indicator, all right? To know when to get in, all right? To know when to get out as well, right? Like talk about Chevron and many of the stocks that we talk about, right? I would say more than 18 over stocks to talk about today, right? Same thing. How do you know when to get in, when to get out? All right, based on the 7-step checklist in the webinar, we will actually dive more into detail. Right? So the link is right in the chat. Okay, Ken? So let me know, guys, if you got value, just type a V for value. If you actually got value in today's session, let me know if you got value. All right, make sure all of you learn something today as well, especially those of you who are new. All right, hope that you learned something. And same thing, our apologies if you cannot cover all your stocks. All right, hopefully you can join us the next Friday AMAS. But all right, let's see, right? Thanks, team. Fabulous session in interesting times indeed, right? Very interesting, very volatile times. Thanks for sticking around. Brandon, value. Joey Tan, thank you very much. Value. Awesome, right? So that's it, guys. Anything to add? Jia, Bhavin, anything to add?
Nothing much for me, but I would just like to point out to everyone that, of course, the stock market is very volatile, and today we're covering only the US market. Of course, I believe you guys have many questions, many requests for the Singapore market as well. So, I mean, do come back next week. All right, we'll be covering the Singapore. I think next week is actually a Good Friday holiday.
Yeah,
the following week we will then cover the Singapore market. All right. Following week we'll cover Singapore market. If you haven't been a client of Joey, or not a client of Joey's currently, all right, you want to find out a little bit more about what it's like being a client of Joey's under Phillips Securities. I think the link is also in the chat. Do check it out. All right. So I would also like to wish everybody a great weekend ahead. Hopefully, not much bad news coming out of the market to us.
Hopefully over the weekend, no more escalation. All right, no more sudden U-turn. All right.
Hopefully got good news.
All right.
Yep. Okay, so anything, Choy? Go ahead.
No, nothing else from me. Yeah, so those who are interested to join the Singapore market, or the AMS, just join us on 10 April, and we'll be there to analyze the Singapore stocks for you. Yeah, if not, I think that's all from us.
Okay, good. Yeah, so that's it, guys. I think next Friday is a good Friday. It's a holiday. So next Friday, then we're back to the Singapore AMAS session. So you're looking at Singapore stocks. Do join us. Then we'll see you guys in about 2 weeks' time for our Singapore edition of AMAS. Right. So I hope all of you got value. The link is right in the chat. Right, the link is right in the chat. Okay, to join us. And also, same thing. Right. I think I mentioned just now as well. If you are kind of like not yet the client of mine in Phillips Securities, you're not getting any service from your own broker. It's just like a platform, an app. You log in and then you own self buy. Nobody send you anything. No idea. No video. No training. No WhatsApp you. No call you. Nothing. All right. Link is right in the chat. Find out how you can join many of our clients over here to get some of those top Singapore ideas for free, right? At no additional cost, and some of our private trainings as well, right? So Joey and team, Jia, Burbin signing off. Thank you so much, guys. Have a good weekend. All right. Have a good weekend. Hopefully the weekend will not be so volatile. All right. We'll see you guys the next round. Okay. Take care. Bye-bye. Bye, everyone.
Thank you, everyone. Bye-bye.